Very good afternoon, all of you. Now we are on the verge of completing the syllabus. Okay, last 2 days, and then we'll directly meet in final CA. Okay, so hope you all pass this time. And see, the provisions which we are going to do, those provisions are provisions for filing return of income and self assessment. Okay, so whatever you have done in the previous year, now you are supposed to inform those things, you are supposed to communicate those things to the income tax department. Okay, so there is a system of self assessment in the Income Tax Act. See, whenever the government will make any law, government would always think that the law which has been made is being properly followed by the people, properly followed by the persons on whom this law is made applicable. Yes or no? So, Income Tax Act, the government thinks that we have made the provisions of the Income Tax Act and we have circulated the Income Tax Act, we have communicated the provisions of this law to the citizen of India, to all the persons. Okay, so they might be following this law. So you are supposed to follow the law. Follow the law means, as per the Income Tax Act, you are supposed to calculate your total income, you are supposed to calculate your tax liability, then discharge your tax liability accordingly. Okay. Now, whatever you have done during the previous year, once the previous year is over, the income tax department wish that you self-assess yourself. Self-assess yourself means you yourself calculate the total income. You yourself calculate your tax liability as per the provisions of this law. Okay. But all the persons, they are not that much capable of interpreting this kind of complicated law and calculating their total income, tax liability, etc. So they require the help of professionals like us, chartered accountants. Okay, so self assess your total income, self assess your tax liability. Okay, discharge your tax liability, and then we will prescribe a format. In that format, in that prescribed format, give the details to us regarding your total income, regarding your tax liability. So the government is asking for your details. So the format in which you are going to furnish those details to the government, that format is known as income tax return, ITR. Sometimes we call it return of income also. So return of income, we call it ITR also. ITR. It is nothing but a form in which we are supposed to furnish our details of total income, details of tax liability, etc. There are various ITRs prescribed for different types of assessees. Different type of formats, different type of ITRs are prescribed. Okay, so ITR 1 is there, ITR 2 is there, ITR 3 is there, ITR 4, ITR U. There are many different formats which are prescribed. Now you have to see that which form is getting applicable to you. Okay, once you decide that okay, ITR 3 is applicable for me, okay, then we are going to file ITR 3. See, I will show you. ITR forms and their applicability. Okay, so if we see, there are different types of ITRs. Okay, if you can see ITR 1, this is a format. Okay, ITR 1, who is going to file this ITR 1? A resident individual having income not more than 50 lakhs from salary, pension, one house property and other sources. So if you are this type of assessee, fulfilling all these conditions, you are supposed to select ITR 1 form. Okay, and you are supposed to fill this form and file your details. But during the previous year, if these details are fulfilled, if these details are if these conditions are satisfied, that means if your income is more than 50 lakhs, total income is more than 50 lakhs, you have capital gains income, more than one house properties you are having, foreign income or foreign assets you are having, you are also having crypto income, okay, which you want to report as capital gains, then holding directorship in any company, holding unlisted equity shares. So if these details are getting applicable to, any of these conditions are getting applicable to you, then you cannot file ITR 1, you will have to file ITR 2. Okay, then ITR 3 is there. ITR 3 is there, income from every income from ITR 2, meaning that ITR 2, all the incomes you are earning, yes, these incomes you are earning, and apart from that you are earning income from business or profession. So if someone asks you that for an assessee who is earning business or profession income, which ITR form is applicable, ITR 3 is applicable. Likewise, see, if you fulfill these conditions, no, if you see ITR 5, ITR 5 is to be filed by firm, LLP, AOP and BOI. Okay, then you will come to ITR 6. ITR 6 is applicable to companies not claiming exemption under section 11. Okay, then ITR 7 is there, ITR 3A is there, ITR 4 is there, ITR 4 is Sugam. Okay, so now these ITR are formats. I wanted to show you these forms. Okay, they are not going to ask you in the examination, tell us which ITR is applicable to which type of assessee. You are not being asked that thing. These things you are going to personally do in your articleship period. If you are lucky enough to get into income tax area in the articleship, so your principal will get you do all these work. Okay, so if these formats are there, these forms are there, what are the provisions regarding the filing of that ITR? Okay, who is required to compulsorily file, who is not required to file, and if the person is required to file the ITR, then when the ITR should be filed, what if there is a delay in filing the return of income, what if there is a mistake in the ITR, how that mistake can be mistake can be rectified. All those details which are all those issues which you usually face while filing your return of income. So the provisions are given. Okay, the provisions will start from 139.1. Okay, out of these provisions which are there, we are going to study this chapter from ICI study mat only. Okay, in the ICI study mat, whatever provisions are there, whatever provisions which are relevant for you to know as far as your examinations are concerned, we are going to touch all those provisions. We are going to do all those provisions in detail properly, and then we are going to move to the next chapter. Okay, and see here, if you will see, the provisions are compulsory filing of return of income 139.1. Okay, the things which I have marked, you are also supposed to mark, because these things are important for your examination. And if I may tell you that there is a compulsory question of there is a confirm a question of 4 marks from this chapter in your examination. Okay, if you will see the last 5-6 attempt papers, you will see that every attempt there is minimum 4 marks question from this chapter, and the question is so easy that it is very easy to score 4 out of 4 marks in that question. Very easy question is asked. Okay, but the question will be easy for you only if you attend the lecture, listen to me very carefully. Okay, only once the effort is required. This effort you are not supposed to put again and again. This is very easy chapter, that easy this is. Okay, now come to this introduction part, return of income. The Income Tax Act contains provision for filing return of income. Return of income is the format in which the assessee furnishes the information as self-declaration regarding his total income and tax payable. So return of income is a format in which you are supposed to furnish the details to the income tax department regarding your total income and tax liability. Okay, the format for filing of return of different assessees notified by the CBDT. So just now I have showed you ITR 1, ITR 2, ITR 3. These are always notified by CBDT. Every year these forms are notified. Okay. The particulars of income earned during under the different heads: gross total income, deductions from GTI, total income and the tax payable by the assessee are generally required to be furnished in a return of income. In short, a return of income is the declaration of income and the resultant tax by the assessee in the prescribed format. This is something which I have already told you. Okay, no? So now, what are the important provision? See, this provision 139.1 which you are going to do is the most important provision in the entire chapter. Okay, this provision will tell you that which type of assessee is compulsorily required to file the return of income. Okay, so there are different types of assessees who are compulsorily required to file their return of income. Okay, and what is the due date by which the return should be compulsorily filed? Okay, so those due dates are also prescribed in 139.1. So now one by one we are going to see that who is compulsorily required. Okay, number one, every company and firm. Don't read anything else other than what I have highlighted. Okay, read only this much, the thing is done. So every company and a firm compulsorily required to file return of income, whether that company or firm is having a loss, having an income, more income, less income, no income, loss. We are least bothered about that. If you are a company, if you are a firm, you are supposed to compulsorily file your return of income for the previous year. Okay, now if you are a person other than a company or a firm, meaning every other person who is not a company, not a firm, they are also compulsorily required to file their return of income if their total income exceeds the basic exemption limit, or the total income in respect of which they are assessable. Meaning sometimes you are a representative assessee. You are not, if for yourself you are not required to file your return, but for others you are required to file the return. For example, you have a minor child. So in respect of minor child's income, his parent is assessable. So if the minor child's income exceeds the basic exemption limit, then as a representative assessee, you are supposed to compulsorily file his return of income. Yes or no? So if your total income or the person on whose behalf you are assessable, the person on whose behalf you are assessable, meaning sometimes a person is a minor, sometimes a person of unsound mind, that person cannot be assessed under the Income Tax Act. On behalf of that person, some other person will be assessable. For minor, who will be assessable? Parents. For a person of unsound mind, who will be assessable? The person who will be taking care of that person of unsound mind, meaning the caretaker. Right? No? So, if your total income exceeds the available basic exemption limit, see, for all the assessees other than firm and a company, there are basic exemption limit provided. So if your total income exceeds the basic exemption limit, then also you are supposed to compulsorily file the return of income. Yes or no? So for company and firm, compulsory filing of return. For every other person, they are also compulsorily required to file the return of income if their total income exceeds the basic exemption limit. Yes or no? Now in the third point, no, don't read anything from here. Rather, they have given a small chart on the next page. That chart is nothing but the presentation of point number 3 in a simplified manner. Okay, so don't read the third point from here, rather read the third point from this chart. Okay, now see the language which they are using: a resident other than not ordinary resident. A resident other than not ordinary resident. So which are the residents other than not ordinary resident? They are ROR only. So the provision, this provision, point number 3, you are reading for ROR. This provision is not applicable for RNOR. This is applicable for ROR. If you are ROR and you are not required to furnish the return of income under section 139.1, why you are not required to furnish? Because your total income is not more than basic exemption limit. So definitely you are going and telling the income tax department that department, I am not required to file my return of income. Why? Because my basic exemption limit, my total income does not exceed my basic exemption limit. Yes or no? So I am not required to file my return. So they are saying, wait, come here. Even if you are not required to compulsorily file your return, still you will be compulsorily required to file, because you are covered in point number 3. You are ROR? Yes. Are you liable to compulsorily file your return as per point number 2 above? No. Then if you hold beneficial ownership of any asset, including financial interest in any entity outside India, You are the beneficial owner of any asset outside India or any financial interest in any entity outside India, meaning you are holding shares etc. of a company outside India, or you are holding any asset outside India. You are ROR, no? Not earning total income more than basic exemption limit. Not required to file your return. Still, you will be compulsorily required to file. Why? Because you are such a person, such a resident, ordinary resident, who is a beneficial owner of assets which are located outside India, or you are beneficial owner of any financial interest in any entity outside India. Financial interest means holding shares, holding securities of any company, of any entity outside India. Okay, holding assets outside India, beneficial owner of assets outside India, or you are having financial interest in any entity outside India. Then you are compulsorily required to file your return. Or you have a signing authority in any account located outside India, meaning you are having bank accounts outside India, Swiss accounts. Yes or no? So here you are saying that you are not having total income more than basic exemption limit. But bloody you are having assets situated outside India, financial interest in entities outside India. You have a signing authority in accounts situated outside India. Then also you are compulsorily required to file your return. Even if you are not covered by point number 2, you will be covered by point number 3, and then also you are compulsorily required to file a return. You must be beneficial owner, beneficial owners. Now what is the meaning of beneficial owner? Come see here. Beneficial owner: an individual who has provided directly or indirectly consideration for the asset for the immediate or future benefit, direct or indirect, for himself or any other person. Meaning that the money you have given to buy the asset, the benefit of that asset is going to happen to you or any other person for yourself. So have you directly or indirectly paid the consideration for any asset? Yes. That asset may or may not be registered on your name. You may or may not be the legal owner of that asset, but you are a beneficial owner of that asset. Why? Because the benefits from that asset either are happening to you or any other person on your behalf. That means you are the beneficial owner of that asset. For example, in Dubai, you are buying a land. Although there is no land in Dubai, but still you are buying a land in Dubai. Consideration etc. you are paying. Now how you are paying consideration? That is immaterial. Directly or indirectly, in whatever way you can pay the consideration to buy that land. Now you don't get the land registered on your name, because if you will get the land registered on your name, if you will take the legal ownership, everyone will come to know that you have so much of money you are earning and you have invested that money in the land. So you are not buying the land on your name. You are buying the land on the name of one of your best friends who stays in Dubai. But you are buying and you are making some other person as the registered or the legal owner of that asset, but ultimately the benefit of that asset are going to come to you or any other person on your behalf. That means you are the beneficial owner of that asset. So it is not necessary that you must be the legal owner of that asset. You must be the beneficial owner of that asset. Getting my point? Hello? Beneficial owner means the benefit of that asset coming to you or any other person on your behalf. The benefit is given. That means you are the beneficial owner. Now who is the beneficiary? Who is the beneficiary? An individual who derives benefit from the asset during the previous year and the consideration for such asset has been provided by any person other than such beneficiary. Meaning, can I say beneficiary can be my spouse? Consideration I have paid for the asset, but the benefit of that asset is not happening to me, even though I am the beneficial owner. Consideration is happening to my benefit is happening to my spouse. So my spouse becomes what? Beneficiary. So who is a beneficial owner? Who is a beneficiary? Did you understand? Hello? Okay. Now here they are using the word beneficial owner of any asset which is located outside India or You are the beneficial owner of any financial interest in any entity, meaning share, security, etc. Or you are having a signing authority in any account located outside India. You have a signing authority. Okay. So if any ROR has satisfied this condition or this condition, then that ROR is also compulsorily required to file the return, even if his total income does not exceed basic exemption limit. Yes or no? Now, if the ROR is a beneficiary of any asset located outside India, or he is a beneficiary of any financial interest in any entity, you are the beneficiary, meaning that asset, you are not the beneficial owner of that asset, rather you are the beneficiary. The income of that asset or income of that share or security is used for your benefit. However, you have not invested your money in that asset. So you are a beneficiary. So even if any ROR is a beneficiary, that ROR, even if his total income does not exceed basic exemption limit, still he will be compulsorily required to file the ROI. But see, this beneficiary will not be required to file the return of income, because whatever income which was coming for the benefit of the beneficiary was already getting clubbed in the hands of beneficial owner. Clubbing provisions are also there. So as a clubbing provision, if the clubbing provisions are getting applicable and the income of the beneficiary is liable to be taxed in the hands of the beneficial owner, then the return of income of the beneficiary is not required to be furnished, because already the return of income of beneficial owner is getting furnished, and in that return this income is already been shown. Getting my point? So where any income arising from such asset is includable in the hands of person specified in A. Person specified in A means beneficial owner. Okay. Then an individual being a beneficiary of such asset is not required to file the return of income under the fourth proviso. Can I say whatever is written here, no? It is the fourth and fifth proviso to section 139.1. Fourth and fifth proviso of 139.1, which says that when you are compulsorily required to file your return, even if you are not required to file your return because your total income was not more than basic exemption limit. This point they test sometimes in the examination. They will give you a case study like this. Will you be able to crack this case study based on this point? So mark this point important, okay? Point number 1 and point number 2, very easy. They usually don't ask such type of case studies in the exam because it is very easy to crack. But this point number 3 is very important. Please understand the meaning of beneficial owner properly and beneficiary also. Yes? Should I move ahead? Okay. Now coming to the fourth point. This is also an important point. See, as per the earlier provisions, you are not required to file the return of income, but you are an individual HUF, AOP, BOI or AJP. So this point number 4 specifically applies to individual HUF, AOP, BOI and AJP. If you are any of these persons and your total income without giving effect to the provisions of chapter 6A or 54 to 54F. Do you remember 54 to 54F? We did in capital gains. So once you calculate your total income, for example, you have calculated your total income, you might have taken the capital gain deductions 54, 54B, 54D, 54EC, 54F. All these exemptions we have already considered, no? Under the capital gains. So after taking these exemptions as well as after taking chapter 6A deductions, your total income becomes less than your basic exemption limit. That means as per point number 2, your total income does not exceed basic exemption limit. Why your total income does not exceed basic exemption limit? Because you have claimed these deductions. Chapter 6A deductions and exemption under 54, 54B, D, EC and F. Now do one thing, calculate your total income without giving effect to these deductions and exemptions. Meaning, if you have taken these deductions while calculating the total income, do one thing, add these deductions and add the exemptions in the amount of your total income. That means now your total income is coming before giving effect to these deductions and exemptions. Yes or no? If that total income is also more than basic exemption limit, the total income without giving effect to chapter 6A or 54, 54B, D, E, C and F exceeds the basic exemption limit. Normally your total income exceeds basic exemption limit, then you are liable to file your return. But what if that total income is less than basic exemption limit? Are you liable to file? No. But still you will be liable to file your return if that total income without giving effect to these sections, meaning add all these deductions and exemptions again back to your total income and check now your total income is more than basic exemption limit. Yes, still you are required to compulsorily file your return of income. Your total income became less than basic exemption limit because of these deductions. Otherwise it was not less than basic exemption limit. Yes or no? So this is also an important point, tested many times in the exams. Okay, please remember this point. Now whenever you are talking about basic exemption limit, no, if you are covered by 115 BSc, you are supposed to check 3 lakhs rupees. And if you are following 115 BSc, definitely you might not have taken deductions under chapter 6A except those 3 deductions: CCD2, CCH2 and 80JJAA. So if you are following 115 BSc, so you might have taken which deductions of chapter 6A? CCD2, CCH2 and 80JJAA. Add them back. You might have taken capital gains exemption 54, 54B, D, E, C, F. All these exemptions might have been available to you even if you are following 115 BSc. So add these exemptions and add the deductions which you have taken: CCD2, CCH2 and JJAA. Now see your total income should be more than 3 lakh rupees, because under 115 BSc you check 3 lakh rupees. Yes or no? Now what if you are shifting out of 115 BSc? You might have taken all the deductions under chapter 6A and you might have taken these exemptions also. So add them back. Now see, your total income should be more than 2 lakh 50. If you are a senior citizen, your total income should be more than 3 lakhs. And if you are a super senior citizen, your total income should be more than 5 lakhs. Understanding? This entire story is written over here in this much big paragraph. No need to read. You all know that what is to be done. Okay? Hello sir. This 4th point was very important. Okay? Please remember this 4th point. Now coming to the 5th point. Any person other than a company or a firm. Now they are not specifically talking about individual HUF, AOP, BOI and AJP. Huh? Now please pay attention. In point number 1. Point number 1. Which type of assessees were covered? Companies and firms only. Point number 2. All persons other than company and firm. Point number 3 also. All persons other than company and firm. No sir. Because see, if you will check, no, a person who is not ordinary resident, other than not ordinary resident, every resident, they are talking about ROR. ROR is possible only in 2 cases: individuals and HUFs. For every other assessee, ROR is not possible. So point number 3 is applicable for RORs only. And which type of person can become ROR? Individual and HUF. So this point number 3 is specifically applicable to individuals and HUFs. Individuals or HUFs whose status is what? ROR. For company, for firm, there cannot be ROR status. For AJP, for local authorities, for AOP, BOI, there cannot be ROR status. ROR status can always be for individual and HUF. So they are not clearly mentioning, but 100% if they are talking about ROR, they are talking about individuals and HUFs only. Yes or no? Hello sir. Now next one. This point number 4 is applicable specifically to individuals HUFs, AOP and BOI, and AJP. See, these points are not difficult, but if they want to confuse you, no, they can confuse in these things. Okay, no, don't get confused. Please remember which point is applicable for which assessee. Okay. Now, if you see any person other than company or firm, meaning all the persons other than company and firm are covered by point number 5. Now, why are you coming to point number 5? Why did you go to point number 3? Why did you go to point number 4? Because normally you are not liable to file your return because your total income does not exceed basic exemption limit. The moment your total income exceeds basic exemption limit, by default you are going to covered by point number 2. Yes or no? But don't worry, if you are not getting covered by point number 2, 100% we are going to cover in point number 3 or point number 4. And if not in point number 3, 4, you will be covered by point number 5 also. Okay. Now point number 5 says any person other than a company or a firm who is not required to furnish a return under section 139(1) is required to file income tax return in the prescribed form and the manner on or before the due date if during the previous year such person has deposited an amount which is more than 1 crore in the current account. So can I say current account deposit during the year more than 1 CR? So greater than 1 CR deposit in what? Current account. Single current account. Either single or multiple current accounts taken together. Okay. Maintained with a banking company or a cooperative bank. So if you are maintaining any current account or current accounts with any banking company or a cooperative bank, in that current account, in those current accounts during the previous year, if you have deposited more than 1 CR, even if you deposit 1 CR exact, you are not required. But the moment it is more than 1 CR during the year, that means even if you are not required to file your return, still we will compel you to file your return. Because see, no, during the year in your current account, if you are depositing more than 1 CR, how can we believe you that you are not having a total income more than basic exemption limit? And you are saying you are not having total income more than basic exemption limit, so you are not going to file your return. That is unbelievable. File your return. You are also supposed to file your return. Let us see that how your total income is less than basic exemption limit. But for that, the return must be filed, no? Now, see, foreign travel expenditure, incurred expenditure of an amount or aggregate of the amounts exceeding 2 lakh for himself or any other person for travel to a foreign country. Meaning that this is not necessary that the amount should be spent on his own travel. It can be spent for the travel of other person also. Might be for spouse, might be for children, might be for other relatives. Yes or no? So if you and your family members are visiting for traveling, see what we want to exactly tell you, that if you are depositing more than 1 CR in your current account, meaning that you are earning that income which you are depositing, no? If you are spending money for foreign tour, where are you getting money to spend for foreign tour? You are earning income, that only you are spending for foreign tour, no? And bloody during the year, more than 2 lakh rupees you can spend on foreign tour, and still you are saying that your total income is not more than basic exemption limit. How do we believe you? Understanding or not? So, greater than 2 lakhs. See, I have not written greater than equal to 1 CR. I have written greater than 1 CR. Now, greater than 2 lakhs. Foreign travel expense. Okay. Now tell me one thing. A person who is a poor person, if you go and see his house, what type of household items you will find in his house? Electrical items, come on, tell me. Tube lights, fans, at the most mobile phones. Other than this, so definitely not earning more, so having less electrical appliances, electrical items, so his monthly or the yearly electricity bill will be very less. But what if your yearly electricity bills are more than 1 lakh? For the full year, your electricity bill of your house is more than 1 lakh, meaning that you are earning huge incomes. Just imagine, you are earning huge incomes. From those incomes, you are buying different types of luxury electrical items. Like ACs are there, TVs are there, fridge, washing machine, this, that. And as a result of that, your electricity consumption will be higher and your bill will be higher. So see, because of that bill also, electricity bill also, you can be caught. During the year, if your electricity bill is also more than 1 lakh rupees, no? Meaning that you are earning income and that income you are not showing us. How did we come to know? From that income only you are going to buy these electrical items and all, no? By using it, which your electricity bill will be definitely more than 1 lakh. Getting my point? So if your electricity expense, consumption of electricity is more than 1 lakh, electricity charges paid during the year, then also you are supposed to compulsorily file your return. We are not going to listen that whether your total income was more than your basic exemption limit or not. If it is more than your basic exemption limit, then definitely you are covered by point number 2. You are supposed to file your return. But if your total income is not more than basic exemption limit, compulsorily you are also required to file your return if you are covered by any of these 3 points. Okay, no? Now what they are saying, fulfill such other prescribed conditions. Who will prescribe those conditions? These 3 conditions are there, which were initially prescribed. Now, apart from these 3 conditions also, CBDT has the power to prescribe other conditions also. So, CBDT has further prescribed, see, wide notification number, CBDT has a wide notification number 37/2022 dated 21st April 2022, inserted rule 12AB. And in that rule 2AB, a person other than a company or a firm who is not required to furnish a return under section 139(1) and who fulfills any of the following conditions during the previous year. See, how many conditions are given? 4 more conditions are given. So 3 here and 4 here, total 7 conditions. Any of these conditions if you fulfill, you are compulsorily required to file your ROI. You can be any person other than company or firm. Why other than company or firm? Company, firm compulsorily required. But other persons might say, no, that my total income does not exceed my basic exemption limit. Okay, no problem. So your current account deposits during the year is more than 1 CR, no? File your return. Oh, foreign travel expense, more than 2 lakhs for yourself or others, file your return. Oh, electricity expense of your house, more than 1 lakh during the year, file your return. And one more condition now. Now, your total sales turnover or gross receipts in the business exceeds 60 lakh rupees. So, your business turnover is more than 60 lakhs. A person having a more than 60 lakh rupees of business turnover, how can we believe you that you are not earning more than your basic exemption limit also? Understanding or not? So if you do 8% of 6 lakh, do 8% of 60 lakh, this 2 lakh 40. 8%, 60 lakh into 8%. 60 lakhs into 8%. It is 4 lakh 80. Now considering your rebate etc. and all, you are earning 4 lakh 80. Meaning that you are still 8% definitely you are going to earn what? Your profit of this turnover. 8% of this turnover definitely you are going to earn as what? Your profit. And if at least you are earning 8%, you are going to earn 4,80,000 during the year as a profit. Show us, no? And still you are saying that your total income is less than basic exemption limit. Then how it is coming less than basic exemption limit? File the return and show it to us. If you are doing a profession and the gross receipt of the professional gross receipts are more than 10 lakhs, 50%, do you remember 44 ADA? 50% of 10 lakh, 5 lakhs. Even if we consider 50% profits out of this gross receipt, you are earning 5 lakhs. That is the bare minimum which we are expecting that you should be earning from your profession as a profit. And that profit you are not earning. You are showing that your total income is below 2,50,000. How come? We want to see. File your return. Getting my point? Next one. If during the previous year you are earning some incomes, on whatever incomes you are earning, TDS is getting deducted. And the aggregate amount of TDS and TCS deducted and collected on your income during the year is more than 25,000 or more. Meaning, if we consider the rate of TDS to be 10%, which is a common rate, majority of the cases, the TDS rate is 10%. You will come to know in the upcoming sections of TDS that in majority of the sections, the rate of TDS is how much? 10%. 25,000 is the TDS, meaning 10% amount is 25,000. Then how much should be? 100%. If 25,000 is 10%, the TDS is 10%. So 10% amount is only 25,000. So definitely your income is going to be 2,50,000 or more only. And bloody you are showing that you are not earning, your total income is less than basic exemption limit. Then show us that thing in your return. File your return and in the return show that how it is less than basic exemption limit. Getting my point? So if the TDS and the TCS both taken together in aggregate on all your incomes during the previous year exceeds rupees 25,000, then confirm you are supposed to file your return. But see, this aggregate limit for senior citizen, it should be greater than 50,000 because for senior citizen a higher basic exemption limit is available, no? 5 lakh rupees. So if 50,000 rupees is the TDS for the senior citizen or a super senior citizen, meaning that the total income of that senior citizen would have been 5 lakh or more. And that senior citizen is saying he is earning less than the total income also. Let us see how. File your return. In your return you show that how you are earning less than your total income also. Bloody your TDS amount itself is 50,000 or more. Meaning definitely you are going to get an income higher than 5 lakh or more. And you are earning income 5 lakhs or more during the previous year and saying that your total income is less than your basic exemption limit. This is something which we don't believe. And if you want us to believe it, file your return and in your return show that how it is less than basic exemption limit. Getting my point, everyone? And but last one, deposit in one or more savings bank account. Now they have covered the savings bank account also. Aggregate 50 lakh rupees or more. If current account is there, 1 CR. And if savings account is there, 50 lakhs. Now they are saying 50 lakhs or more, guys. Not more than 50 lakhs. 50 lakhs or more, greater than equal to. They are greater than 1 CR. Here, greater than equal to 50 lakhs. So, greater than equal to 50 lakh rupees deposit in savings account. Now the savings account will be held with any banking company, any cooperative bank, or even post office. Yes or no? Now if you are any of the persons covered in all the above categories, then you are compulsorily required to file your return of the previous year during the assessment year. And what will be the due date? What will be the cutoff date on or before which you should file your return of income? It can be 31st October also, it can be 30th November also, and it can be 31st July also. And you all know, we have already discussed all these dates. If you are a company or firm, if you are a company, compulsory return filing, and the due date is on or before 31st October. If you are any person other than company, for you also the due date will be 31st October, provided you are covered by tax audit provisions. Provided you are covered by audit provisions under the Income Tax Act or any other law also. It is not necessary that you are liable for tax audit only. If your books are liable for audit under other laws also, then your due date will be 31st October. Okay. And a partner of the firm which is liable for audit. Firm is liable for audit. So for firm, the due date will be 31st October. And every partner of that firm will also file his individual return on or before 31st October also. Okay. So 31st October applicable in 3 cases only. In the case of a company, in the case of every person other than company who is liable for audit. Which audit? Tax audit or audit under any other law? Yes or no? And even the partner of the firm which is liable for audit. Every partner of that firm, for that partner also his individual return must be filed on or before 31st October. Now, there are provisions for transfer pricing in your CA final which you are going to study. Okay. So, if there is an assessee to whom the transfer pricing provisions are applicable, and that assessee is also compulsorily required to get a TP report made. TP report means transfer pricing report. Transfer pricing audit also happens. Just like tax audit happens, there is one more concept of transfer pricing audit. And if you are getting this transfer pricing audit done from a practicing chartered accountant, so along with the tax audit you are going to do one more audit, transfer pricing audit. So might be these things will take some time. So for you, additionally a requirement of transfer pricing audit is there. Okay, no? So for you 31st October will not be made applicable. For you 30th of November will be made applicable. Okay. So any assessee including the partners of the firm, if the firm is also liable for transfer pricing audit, so for firm the due date will be 30th November, and for every partner of that firm 30th November will be applicable. Yes or no? So any person to whom transfer pricing audit provisions of section 92E are applicable, for that person the due date is 30th of November. Will you remember this? Sure. Firm to whom the transfer pricing audit provisions are applicable, 30th November. So every partner of that firm also 30th November. And in the case of all other assessees who are not covered by point number 1 and 2, the due date is 31st July of the assessment year. So once the previous year is over, in the assessment year on or before these dates, the return must be furnished. The return must be filed. And compulsorily filed those persons whose names we have just seen above. Yes or no? Will you remember this? Okay. Now, illustration number 1. Come on, let's start. Paras, aged 55 years. Is he a senior citizen? No. He is a resident of India. Okay. He is a resident. Okay. During the financial year 24-25, interest of 2,88,000 was credited to his NRE account. Do you remember yesterday only we have done this NRE account? Any interest on your NRE account is fully exempt under section 10 subsection 4. Meaning, is it your taxable income? No. Is it going to go in your total income? No. Now 30,000 is interest on fixed deposit. This will be your taxable IFRS income credited to his saving bank account. See, FD interest is getting credited to his savings account. That does not mean that this interest becomes a savings account interest. Yes or no? You are having a fixed deposit in a bank. So bank will ask you, no, that tell us how do you want the interest to be paid to you. So you gave your savings account number to the bank and bank is crediting your FD interest in your savings account. Just by crediting that FD interest in your savings account, it does not become your savings interest. It is still your FD interest. Yes or no? So FD interest 30,000 will be taxable under the head IFOS. For that you are not going to get any deduction under 80 TTA, because under 80 TTA you get the deduction for savings interest. This is not your savings interest. This is just an interest which is getting credited to your savings account. Hello? For that you could have claimed 80 TTB, but you cannot claim 80 TTB for this interest because you are not a senior citizen. If you would have been a senior citizen, then this interest you could have claimed under section 80 TTB. So this interest will not be allowed to you under 80 TTA also, under 80 TTB also. This will be shown fully taxable under the head IFOS. Now 3,000 additionally you are getting interest on savings account. So whatever savings account you are having, whatever amount is there in the savings account, on that amount of the savings account you are getting interest of 3,000. This 3,000 will be your IFRS income, and for that you are going to get 80 TTA deduction also. Up to 10,000 savings interest is exempt, no? Allowed as a deduction, no? Under 80 TTA. Now, is Paras required to file the return of income? The answer is a big no. Because the total income of Paras is only 30,000 plus 3,000, 33,000. 2,88,000 will not be considered only because this is fully exempt under 10.4. We don't consider the exempt incomes in the computation of total income, do we? So what will be the total income of Paras? 30,000 plus 3,000 will be 33,000. Out of 33,000 he is going to get 80 TTA deduction of 3,000. So total income of Paras will be only 30,000, which is less than his basic exemption limit. So as per point number 2, Paras is not required to file his return of income. Now you are supposed to see, is Paras getting covered under point number 3? Beneficial owner, beneficiary, no sir. Is Paras getting covered under point number 4? Point number 4 said that if you are individual HUF, AOP, BY, AJP and your total income before giving effect to chapter 6A deductions and 54, 54B, D, EC and F, before giving effect to this, your total income should be more than basic exemption limit. How much is your total income? 30,000. Have you taken chapter 6A deductions? Yes, only 3,000 deduction you have taken. Add that. Have you taken any other chapter 6A deduction? No. Have you taken 54 to 54 F? No. So total income without giving effect to these chapter 6A deduction and capital gain exemption is still 33,000, less than basic exemption limit. So he is not required to file his return of income as per point number 4 also. See point number 5. What was there in point number 5? Point number 5 talked about different cases, no? Notified cases, conditions. So, is any such information given in the question? Deposit of more than 1 CR in current account. Then, electricity charges more than 1 lakh. Foreign tour expense more than 2 lakhs. Business turnover more than 60 lakh. Professional gross receipts more than 50 lakhs. These conditions are not given in the question, meaning that he is not getting covered under point 5 also. So he is not required to file his return of income. Now, what will be your answer if he has incurred 3 lakh as travel expenditure for self and spouse to US? Now, even if he is not required to file his return, but still he will be compulsorily required to file his return of income because his foreign travel expense exceeds 2 lakh rupees. Hello, for himself and his spouse, himself and other person, total foreign travel expense exceeds 2 lakh. So as a result of that, now he will be required to compulsorily file his return. This type of question will come in the exam for 2 to 4 marks. This type of case study they will put in front of you, and they will ask you, as per the provisions of the Income Tax Act, comment whether the assessee is required to file his return of income or not. If yes, then why? If not, then why? 2 marks. See, these type of questions they are asking in the exams, and you are not able to write. Will you be able to give the answer correctly? Please check the answer once. Please. See, this is the answer. Please check. The points which I have highlighted, no? Your answer must have these details. Please read the solution properly, slowly. Did you understand the solution? Easy, no? Now read the second part. And the note which is given over there, that is regarding the 2,88,000. We have assumed that this assessee, Paras, was allowed by the RBI to open this NRE account, or he was a person resident outside India as per FEMA. So if you are a person resident outside India as per FEMA, or RBI has given you the approval to open such NRE account, hence the interest is exempt. But what if you are not a person resident outside India, or RBI has not given you any approval, but still you have opened such account? Then the 2,88,000 interest will not be exempt under 10(4), then it will be taxable. And if that interest is getting taxable, so your total income will not be only 30,000, it will be 2,88,000 plus 30,000, it will be 3,18,000, which is more than your basic exemption limit, guys. Hello? Then you are supposed to compulsorily file your return. Yes or no? So we have claimed the exemption of that 2,88,000. Hence, the total income is less than basic exemption limit. And before giving effect, without giving effect to Chapter 6 deductions and capital gain exemption also, it is less than total income. Less than basic exemption limit. Hence, we are not required to file. But if this 288 was not exempted, it was considered as your taxable income, then the total income would have been 3,18,000, which is more than basic exemption limit, and accordingly we would have been required to file the return compulsorily. Yes or no? Sure, sir. 3,000 basic exemption limit. Basic exemption limit is 2,50,000. It is more than 2,50,000. And we would have added the Chapter 6 deduction also, which we have claimed, 3,000 rupees. Yes or no? So 30,000 was the total income. In that we are adding what? 2,88,000, assuming that it was not exempt. And we have added that 3,000 rupees Chapter 6 deduction also. Okay, no? Now pay attention. If he has incurred expenditure of 3 lakhs on foreign travel of self and spouse, he has to mandatorily file his return of income even if his total income is less than the basic exemption limit. This is the answer of your second part. Okay. Now 139(1)(c), the next section is there. Put a cross mark. No need to read. This is something, see, if you are an employee, I'll just give you an idea about this. If you are an employee, you can file your return on your own. Okay. But you can file the return of your income through your employer also, because your employer might be having all your details. Yes or no? How much salary is giving, how much is your insurance premium, this, that, all the majority of the details are given with the employer only. So if you wish, you can file your return through your employer also, So employer is allowed to collect the data of all his employees, and through employer the return of all the employees can be filed at once. This is given in 139(1)(c). Every person who falls within the ambit of conditions mentioned under 139 has to furnish return on or before the due date. For reducing the compliance burden of small taxpayers, the government has empowered to notify the class or classes of person who will be exempted from the requirement of filing return of income subject to satisfying the prescribed conditions. So if you have filed your return through your employer, there is no specific requirement to file your return again now, because all the details, your details are provided through employer only. Okay, no? So central government can notify such class or classes of person to whom such kind of benefit can be given, that okay, even if you are required to file your return, still the government is giving you immunity, government is giving you exemption, no need to file the return of income. So to power to the central government to give this immunity, give this exemption to certain class or classes of person is given by 139(1)(c). Okay, no? Don't read this. Return of loss. Read this. Somewhere you have already done this. This entire section you have done this somewhere. And tell me whether you are aware about this thing or not. In set off and carry forward chapter only I have told you. If you have calculated a loss for the first time in any previous year, so loss of that year will be allowed for carry forward in the subsequent year only if the return of that year is filed on or before the prescribed due dates. Yes or no? And in that return, whenever you are showing the losses of this year to be carried forward to subsequent year, that return must be filed on or before the due date, and that return is known as loss return. So what is a loss return? A loss return is a return in which the current year income along with current year losses, which are supposed to be carried forward to subsequent year, is shown. And that return must be filed on or before the due date of filing ROI. And if that return is filed on or before the due date of ROI, then these losses can be carried forward to subsequent year. But this restriction does not apply to two losses. Loss under the head house property and unabsorbed depreciation, that you can see in point number 4. Hello sir? Yes or no? Now, don't read the other part. No need to read, okay? No need to read. Belated return. Can you say a belated happy birthday to someone? Birthday is gone. You meet him after 2 or 3 days. And you say, oh, sorry, I forgot to wish you your birthday. Belated happy birthday. You say, no? So if you can say belated happy birthday, so you can file belated return also. But till what time you can file? If the return of income due date is already gone. So after the due date of filing return, can you still file your return of income? Yes. It is given in 139(4). 139(4) is the section which allows you to file your return late, even after the due date of filing ROI. So what was your due date example? It was 31st July or 31st October, or in some cases it is 30th November also, no? So if the due date is already gone, for example, the due date was 31st July. 31st July is gone. Ayyo, today is 3rd August and you remember, I forgot to file my return. So now can you file the return if the due date is gone? Yes. But there is a time limit within which that belated return should be filed. So when is your assessment year getting over? Assessment year for the previous year 24-25, for the previous year 24-25, assessment year will get over on 31st March 2026. 3 months prior to that, whatever date will come. So 3 months, the date which is immediately coming 3 months prior to the end of assessment year. The date which is coming 3 months immediately prior to the completion of assessment year. Can I say 31st December of the assessment year? Because the assessment year is getting over. If I say previous year is 24-25, yes or no? So assessment year is 25-26. So assessment year is getting over on 31st March 2026. So the date which comes in 3 months immediately preceding to the end of assessment year is 31st December 2025. This is the last date for filing your belated return. Or sometimes what happens, for the previous year, the returns are being filed by all the persons, yes or no? So what happens after the return is getting filed? It is the department now who starts the assessment. Now you all keep on filing your return, the department will keep on assessing. You all keep on filing the return, the department will keep on assessing. Okay. And once there will be a date which will be declared by the department that this is the date on which the assessment for this previous year we are going to complete. That is known as the date of completion of assessment. What did I say? Date of completion of assessment by the department. So, if I say that the previous year is 24-25, okay, previous year 24-25, so the return of income showing the total income and tax liability for this previous year must be filed on or before 31st of July. Example, 31st July 2025. Can I say this is the due date of filing ROI as per 139(1)? If you fail to furnish your return on or before 31st July, so they are saying this was your assessment year 25-26. When this is going to end? This is going to end on 31st of March. 31st of March 2026. So a date which comes 3 months prior to this, that date is 31st December 2025. The date which is 3 months prior to the end of assessment year. Yes or no? Either this date or completion of assessment by the department. Date of completion of the assessment by the department. Now the department will announce a date of completion. That see, whoever is filing the return of 24-25, everyone is filing the return. Yes or no? Many of them have filed on or before the due date. Many of them have filed on or before the due date. And many are filing after the due date also. And we are going to complete the assessment of this previous year on 28th of December 2025. So this is the date on which the department has completed the assessment from its side. Department is saying that whatever returns which were supposed to come to us, all the returns we have received and all the returns we have assessed. This is the date of completion of assessment for this year. We are not going to run the assessment of this year for number of years. No. If you are filing the returns, so the moment you will file the return, the department will process your return. The department will also assess your total income. And if the department's assessment completion happens on 28th of December, so 31st December or 28th December, whichever is earlier, on or before 28th December, you should file your belated return. After 20th December, the department is not going to again start what? The assessment, because they are completing the assessment on 28th of December. So file your return on or before 28th of December. Yes or no? Then 31st is not applicable. But what if the department is saying that this year too many returns are coming and we are completing our assessment on 19th of February. So 19th February is not available for filing the belated return. 19th February, completion of assessment or 31st December. Completion of assessment or 31st December, whichever comes earlier. So completion will happen earlier or 31st December will come earlier. 31st December. So belated return cannot be filed after 31st December. Either it will be filed on or before 31st December or on or before the completion of assessment, whichever date comes earlier. On or before that date, the belated return must be filed. Will you remember this point? All the points where I have put a star mark, the examination questions are made on these points. Understanding or not? They will ask you under 139.4. They will give you a case where they will give you the name of the assessee, total income, this, that, everything, all the details, the case they will form, and they will ask you whether the assessee is liable to file his return. If yes, then can the assessee file his return on 12th of August? So you are supposed to give the provisions of 139.1 also and 139.4 also. You will have to give your answer based on whether he is compulsorily required to file or not. And if yes, he is compulsorily required to file on or before this due date. But if this due date is missed and he wants to file his return on 12th of August, he can file. Because date of completion of assessment, if not given in the question, he has to file on or before the 31st December of the assessment year. So 12th August comes before 31st August, he can very well file the belated return on 10th August. Got it, sir? These kind of case studies they will create. Very easy, very easy. Are you finding it difficult, everyone? Easy only, no? Sure? Now, can you revise your return? Revise means rectify, correct your mistakes. Yes. See, you have filed your normal return as per 139.1 on or before the due date, or you have filed your loss return as per 139.3, or you might have filed your belated return. Any return you file, in that return there is a possibility that there was a mistake which happened. Instead of claiming one deduction, you forgot to claim that deduction. ATC you forgot to claim. Can you tell the department, the return which I have filed earlier, please ignore that return, and in the place of that originally filed return, I am filing a new return to replace the original return. Yes or no? So the revised return is nothing but you are replacing your original return which you might have filed as per 139.1 or 139.3 or 139.4. 139.1 normal return. No, original return can be normal return filed on or before the due date. Yes or no? 139.1. Or it can be 139.3 loss return also. Or it can be a belated return also which can be revised. Any return which you have originally filed, you can revise that return. And why the return is revised? To eliminate the error or the omission. Sometimes there is a possibility that you had earned some 50,000 rupees of income as a gift and you forgot to, because you did not, record that amount in the books. So you forgot to take that gift as your income under the head IFOS. So you thought that, oh my God, I have forgotten to take one income and to show taxable. What if later on they'll come to know? They will kick me out of the country. They will tell me that I am a tax evader. I don't want to be a tax evader. I am a genuine taxpayer. So some income I have forgotten to show. Let me revise my return. In the revised return, I will show that income. Some deductions you might have forgotten. See, revised return can be filed only if you have yourself identified your error or omission, and voluntarily you are going to rectify that. So you are telling the department, the original return which I have filed, no, please ignore that return. In the place of that return, I am filing my revised return. So within how much time the return should be revised? The same time limit given, which was given for belated return. See, can you see belated return time limit, which I have already explained? On or before 31st December of the assessment year or completion of assessment, whichever is earlier. So to revise the return also, the same time limit is prescribed. Okay. Now tell me one thing, within this much time, can you revise your return once or multiple times? How many times the return can be revised? The return can be revised n number of times. Even the return which you have revised, no, that revised return can also be revised. Now original return you had filed. In that original return, you forgot to show some income. So you filed a revised return. Now after filing a revised return, you come to know, shit, there was one more thing which I forgot to intimate. There was ATC deduction which I forgot to take. But what if I have already filed my revised return? Can I revise that return again? Yes. But all the revisions must happen within this time limit. After this, there is no revision allowed. Okay. Now, why the revised return is allowed to be revised once? The original return which you had filed, that will be replaced by the revised return. Now, the revised return does not remain the revised return. It becomes your original return. Now, even there is some mistake in this revised return, even that can be replaced by filing a new revised return. Getting my point? This can happen n number of times. But the revisions, all the revisions should happen within this time only. Will you remember this? Okay. So revised return 139.5. Okay. Belated return cannot be filed after 31st December. See, here also belated return they have written. And here also belated return they have written. They have copy pasted the same thing but forgotten to eliminate this. Write down here. Here it is okay. Belated return cannot be filed after 31st December. Here write down revised return cannot be filed after 31st December. This is wrong. Printing mistake by the ICI. Okay. Done, sir. Now see, whatever you have studied now, I'll tell you to do one thing. Don't read the things which we have studied above. Just to do this one page. This is the summary of the entire stuff which you have already studied. So if you will read this summary, no guys, trust me, all the provisions which you have already studied so far from 139.1 to 139.5, every damn single thing is covered here in this one small page. So mark this page very, 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 very important. Before exam, just see this page once. That's it. Okay. Will you be able to do it? Friends, are you understanding what is happening in your life? Now come to illustration number 2. Explain with brief reasons whether the return of income can be revised under section 139.5 of the Income Tax Act in the following cases. Belated return which are filed under 139.4. Can you revise your belated return? The answer is yes. Return already revised once. Can you revise that return also? Yes. Return of loss filed under 139.3. In that return, you have forgotten to show some loss. Can you revise? Yes. In that return, you have claimed more loss for carry forward, but the loss was less to be carried forward. Can you revise? Yes. So any of these returns can be revised. Okay. Read the provisions once at home. Now 234A, I'm going to do it with advanced tax today. Okay. While doing advanced tax, I'm going to do this. Now 234A, after that self-assessment. This is also to be covered with advanced tax. Today with advanced tax, I will cover this also. Okay. Now there is ITRU. This is important, very important section. Since the time this has come in the syllabus, this section came with effect from 1st April 2022. Prior to 1st April 22, there was no concept of updated return. So the concept of updated return came in the Income Tax Act for the first time with effect from 1st April 22. So this was your Finance Act 2022 amendment. Okay. Now, since the time this has been inserted in your syllabus in the CA Intermediate, this has been asked in almost 4 to 5 attempts. 3 to 4 attempts minimum this has been asked. Very easy section. Okay. See, if you have not filed your return, whereas you were required to file your return, but you have not filed your return at all, belated return due date is also gone. If you cannot file your return on or before, government wants you to file your return on or before the due date. But what if the due date is gone? You can file your belated return also. But what if the period to file the belated return is also gone? now you have the option to file updated return. So whether you have not filed the return, then also you can file the updated return, or if you have already filed your return and you have tried to hide something from the government and now you are worried that what if they come to know that I have tried to hide something from them, but they must be aware about this, and you are getting anxious from inside. Still there is some time for you to come out clean. Okay, we are giving you the option to file the updated return, update your return. But later on when we'll catch you, then you will be gone. Getting my point? See, I was earning the income of 50 lakhs. I should have shown 50 lakhs as my total income. But somehow I suppressed 5 lakh rupees of income, 10 lakh rupees of income, and I have shown only 35 lakhs only as my total income. I have already filed my return, and in the return I have shown 35 lakhs. So the government is saying, see, you have filed the return and in the return 35 lakhs you have filed. That means you are yourself declaring that you are earning 35 lakhs. And don't think that we are not having your financial information. From different locations, we will collect your financial information. And if we come to know that your total income for this year was not 35 lakhs, it was higher, and we catch some income, then there will be penalties, prosecution, interest, tax liability collection, everything will happen against you. Then you will be considered as a tax evader, no? We'll collect the tax on the extra income. Along with that tax, we'll charge penalty also. We'll charge the interest also. And additionally, we'll prosecute you also. You can go to jail also for this. So you still have time. So you were getting very, anxious. Your chartered accountant told you that let us file 35 lakhs. No. What is the problem in that? Let us file 35 lakhs. Later on, we'll see whatever happens. But you were getting very anxious. So you told your chartered accountant, no, I don't want to do this thing. Okay. You should have told earlier only. You should have told your correct total income in your return earlier only. But later on also, if you realize your mistake and now you want to come out clean, we are giving you this option to file your updated return. In the return which you have already filed, whatever income you have shown, you can increase that income and show extra tax payable. But updated return you cannot file to decrease your total income and tax liability or increase the amount of your refund. This option is not given to do that. Okay. So either you have not filed your return, file your return to pay your tax liability, which you were supposed to pay. Yes or no? But since you did not file your return and did not pay the tax liability, we are giving you this option. Oh, you have already filed. Wow. But in that already filed return, have you shown the correct total income, correct tax liability? No. More total income is there, more tax liability is there. We are giving you this option. But wait. Total income which you have already shown in the return filed, reducing the tax liability by filing this updated return cannot be done. Refund you have already claimed in your original return. Your total income was this much. So tax was this much and refund was coming. So now you are reducing your total income and reducing the tax liability. By doing this, you are increasing your refund. This is also not allowed. So you can file the updated return either to increase your total income and show additional tax. And if you have not filed your return, you were supposed to file the return and pay the tax, but you did not file the return, we are giving you this option. Getting my point? 139.8a, most important section. Okay, if you are getting one question on this section, don't be amazed, because I guess in the last attempt they have not asked this section. So this attempt they can ask. Okay, pay attention. Any person means company, firm, AOP, BOI, AJP, individual, HUF, any person can file updated return. There is no restriction. And the form the form prescribed to file your updated return is ITR-U. ITR 1, ITR 2, ITR 3. No. Those ITRs you file normally. Okay, but if you are filing your updated return, there is a separate format prescribed to file your updated return. That format is ITR-U. Now, within how much time you can file your ITR-U? Within how much time you can file your updated return? Within 24 months from the end of assessment year. So, for example, for previous year 24-25, the return was required to be filed in the assessment year on or before the due date. You did not file on or before the due date. Due date gone. So belated return can also be filed in the assessment year till 31st December. Yes or no? That 31st December is also gone. You have not filed the belated return also. So now you have the option to file what? Updated return. Because you did not file the return on or before the due date and neither a belated return. So now you can file updated return. What is the due date? Let the assessment year get over. After the assessment year, what did I say? After the assessment year gets over, within 24 months from the end of assessment year, the updated return of previous year 24-25 can be filed. So what is the assessment year 25-26? End of assessment year, meaning 31st March 2026, count 24 months. 31st March 2027, 31st March 2028. On or before 31st March 2028, you can file the updated return for the previous year 24-25. But can I say for the previous year 23-24, it can be filed up to 31st March 2027. For the previous year 22-23, it can be filed up to 31st March 2026. Yes or no? And for earlier previous years, this option is not available because 31st March 2025 is already gone. Got it, sir? 31st March 2025 already gone. Now, after 31st March 2025, we are in which month? August 25. In August 25, can you file the updated return of 21-22? No. Hello, sir. So which are the previous years? You have to see the previous year, see the relevant assessment year. 24 months from the end of that relevant assessment year. That is the maximum period within which the updated return must be filed. Okay. Now see, what if you have already filed your return? If you have not yet filed, then also the same period is allowed. And if you have already filed, then also the same period is allowed. For example, for 24-25, you have already filed your return. For 24-25, you have already filed your return. And now that return you want to update. Can you update? Yes. Within how much time? End of the assessment year. 24-25. What is the previous year? 24-25. And what is the assessment year? 25-26. End of the assessment year, 2 years from there. 24 months from there. Meaning 31st March 2028. On or before 31st March 2028, if you have not filed your return for this year, then file updated return. And if you have already filed the return showing less total income, showing less tax liability, then you can update this return on or before 31st March 2028. Hello, sir. So for assessment year 24-25, it can be filed. Assessment year 24-25 means previous year 23-24. Guys, previous year 23-24, assessment year 24-25. So end of the assessment year, how many years? 2 years. So end of the assessment year 25 to 26, 26 to 27. So the return of 23-24, previous year 23-24 can be filed on or before 31st March 27. Yes or no? And if I talk about assessment year 25-26, meaning I'm telling about previous year 24-25, then this date will be 31st March 2028. Done, sir? See, they have not updated the last example which they had given. No, they have not updated this. We are already in assessment year 25-26. So why are you talking about assessment year 24-25? Talk about assessment year 25-26, no. And assessment year 25-26 is for previous year 24-25. So the return of 24-25 can be filed in assessment year 25-26. But the updated return for this same previous year can be filed within 2 years, within 24 months from the end of assessment year only, no? So what is the assessment year? 25-26. End of 25-26, 24 months will be 31st March 2028. Please, this date they will ask in the exam. Be very careful. Okay. Now, non-applicability. What did they say? Non-applicability of what? Provisions of updated return. When the updated return cannot be filed. In case of a loss return. If you have filed a loss return, can you file updated return? No. If the return was a loss, showing losses to be carried forward to subsequent years, yes or no? For that loss return, the updated return cannot be filed. Wait. If you have already filed a loss return, you cannot file the updated return to claim more losses. But definitely to reduce the losses in that return, you can file the updated return. That is given in point number 3. Check. For the loss return, you cannot file the updated return. For previous year 24-25, you have filed a loss return, meaning the losses of this year you are carrying forward to subsequent year. Yes or no? So you have filed in your return that you are carrying forward the losses for this year. Hello sir, understanding? So this loss return cannot be updated. Because if you will update, what you will try to do? You will try to increase the losses which you want to carry forward, no? And if you will increase the losses, meaning this year or next year, you are going to show these losses as set off, and these losses will result into lower tax liability. Higher losses will show lower tax liability. Yes or no? So if you have already filed loss return, you cannot update. But wait, for this point number 1 only, they are telling you point number 3. They are saying that updated return can be filed if original return is a loss return and updated return is a return of income. In the original return, you have shown that there are losses to be carried forward. But if you update that return and you are showing that no losses are carried forward, these are the incomes which I want to show taxable, that you can do. So loss return you are replacing and you are showing the total income taxable for that year. Okay. Either you are reducing the losses or you are increasing the total income for that year. Then even the loss return can be updated. Otherwise, loss return cannot be updated. Yes, sir. So see, if any person has a loss in a previous year and has furnished a return of loss on or before the due date of filing ROI, he shall be allowed to furnish an updated return if such updated return is a return of income. Now that is not a return of loss. Now that is a return of income. Meaning that Mr. X has furnished his return of loss. Okay. Consisting of 5 lakh as business loss. In that return, he has shown a 5 lakh rupees of business loss. He can furnish an updated return if such updated return is a return of income. Meaning that he takes out his business loss out of his return and showing only taxable income in the return. Can he file his updated return? Yes. So in the originally filed return, he was showing a loss of rupees 5 lakhs. Now he is removing that loss out of his return and he is showing just the total income, taxable income in that return. Can he file the updated return? Yes. But wait, for any year, if you have filed return of loss, for any year you have filed the return of loss, and that loss return you are updating by showing a taxable total income for that year. Yes or no? Don't you think the returns of subsequent years also will be updated in that case? Because in the return of this year, if you have shown the loss, now that loss you would have carried forward to the next year, and maybe in the next year you would have claimed the set off of those losses, and as a result of that the next year's income would have come down. Hello sir. Now in the main return only which had this loss, that main return only you are updating and showing that no, this loss was not there, this is a return of income. That means if that loss does not exist only, then there was no point of carry forward of that loss and set off of that loss in the subsequent year. And in the subsequent year you have already carried forward that loss and set off that loss in the next year. Getting my point? So you will have to update the return of subsequent year also. Getting my point? If the loss return, first of all, understand, loss return cannot be updated. But a loss return can be updated to show a return of income, meaning that eliminating the loss, showing just the income. Can you do it by updating your return? Yes. But if you are doing it for any year, subsequent years returns if filed, you have to update the subsequent year's return also, because the losses, if you are eliminating, might be in the subsequent years you have carried forward those losses and taken the set off of those losses, and as a result of that subsequent years incomes would have brought down, subsequent years tax liability would have been brought down. If that loss does not exist only, so why have you carried forward? Why have you set off? Update the return of subsequent years also. Got it, sir? So updated return to be furnished for subsequent previous year in case number 3. See, they are talking about this point only. Okay? Just remember this thing only, which I am discussing with you. No need to get into too much depth. Okay? At CA intermediate level, they are not going to, put you in trouble in these kind of things, because your mind is not matured right now to absorb these things in minutest details. Getting my point? What I'm trying to tell you. So whatever I'm telling you, are you all understanding that much? So that is sufficient. No need to get into too much of the details. If the requirement is there, you know me, I will take you to the details also, if there is a requirement. And if there is no requirement, don't waste your time to these things which are immaterial as of now. But these things will be very important in your CA final, when we will be doing assessment procedure. In assessment procedure, the same things are coming in, immense detail. The calculations will be done based on these provisions. What if this year's return was a loss return? Can you update it? Yes, by filing a return of income, you can update it. What if the return of next 2 years was also filed, and in those returns this much loss was allowed as a set off and this much income was shown taxable? Now will those returns of subsequent years will also be updated? Yes. And if updated, then how much total income should be shown in those returns also? Okay, these calculations we are going to do in final. Okay, by that time the income tax law will change. It has already been changed. Okay, so you are going to learn the new income tax law, and under the new income tax law, what are these provisions, how they are there, you will learn everything later on. But right now, did you understand this much? Should I move ahead? Okay, now pay attention. 2 more cases. It has the effect of decreasing the total tax liability. I have already told you that you cannot file your updated return to decrease the amount of tax which you have already paid. Okay, so to decrease the tax liability, we are not giving you this option to file updated return. Okay, if you have shown lower total income, paid lower tax, so you can show higher total income, pay higher tax. If you have shown lower total income, claimed a refund, now bringing your total income further down, claiming a higher refund, for that also you cannot file your updated return. I have already told you in advance. Okay, sir? In these cases, updated return cannot be filed. Sure, sir? Now, point number 5. Circumstances in which updated return cannot be furnished. Again, there are certain circumstances in which the updated return cannot be furnished. See, you have already furnished an updated return for any assessment year. Now you cannot update the updated return. For a previous year, you have already filed an updated return. But in that updated return, you have not shown the correct particulars. You are still afraid that, okay, I have, how much total income you were earning? 50 lakhs. So in your original return, how much did you show? 35. So 50 lakh you should show in your updated return, no? But in the updated return, you have shown only 40 lakhs. You have already filed your updated return. Okay, no? And in that updated return, you have shown only 40, whereas it was 50. See, first time you got afraid and you filed an updated return. And in that updated return, also, you are not showing us the correct truth. And you want to again update it. We are not going to allow. Getting my point? So once for any previous year, any assessment year, if you have filed an updated return, you cannot again update that updated return. Yes or no? Or for any previous year, for any assessment year, any proceedings for assessment, reassessment, recomputation, revision is pending or has been completed. Meaning, from the side of the income tax department, your assessment is already started for that year. Your assessment or your reassessment or recomputation or revision, all these processes have already been started for that year. Or for that year, these things have been performed by the department. Your income has already been assessed. Your income has been reassessed for this year. Your income has been recomputed for this year. Or your income has been revised. There is a revision. Is pending. It is going on, or it has already been completed for any year. So if the issue is already under consideration, and now coming to know that these things are going on, maybe you will come to know, the department will come to know the fact. So to save yourself from those actions which they are going to take, you are now filing the updated return. No, not allowed. Not allowed. If these proceedings are pending, going on, or even these proceedings have been completed, they have come to know that you are not earning 35, you are earning 50. And they have completed and they have shown that, see, you are earning 50. We have all the details and we have assessed your total income to be 50. You said, no. You have assessed, no. Before that, let me file updated return. You cannot do that. Getting my point? So updated return cannot be filed under these two circumstances. For any year you have already filed an updated return, that updated return cannot be again updated. Okay, and for any year, if the proceedings are pending, what type of proceedings are pending? Assessment, reassessment, recomputation, revision, etc. These proceedings are already initiated by the department for this year. Or initiated and completed by the department, showing a higher income in their assessment, and now you want to hide your face by filing a updated return. You cannot do it. Got it, sir? Everyone understood? This is the end of updated return. Now see, updated return cannot be furnished by such person or belongs to such classes of person as may be notified by the CBDT. So far, CBDT has not yet notified, and even if notified, not there in your syllabus right now. Okay, these provisions are to be dealt with in extreme details when we are going to study what? Final CA. In final CA, there is a separate part, assessment procedure. In that assessment procedure, the very first chapter is what? Filing of return, return provisions. So these provisions which you have learned from me, no, right now, these provisions are going to come in complete details over there in final CA. Okay, so that time this section will also be dealt with in complete details over there only. Okay, right now whatever basic requirement of this section was there, you have understood. No need to get into details. Okay, now there are other circumstances also in which updated return cannot be furnished for the relevant assessment year. For example, where prosecution proceedings are initiated, those circumstances will be dealt with at final level. So these are not the only two circumstances in which you cannot file updated return. These are the two circumstances given for you to understand, and these are only the two things which you can right now correlate at what? Your CA intermediate. Other circumstances also in which the updated return cannot be filed, but those will be dealt in final CA. Okay, now should I move ahead? Okay, now see, tax on the updated return. This section is a time pass section. I have deliberately written it. Okay, how the tax will now be calculated? See, in your updated return, no, you are going to show higher total income. If you have not filed your return, you are going to file your return, show your taxable income and pay the tax. Yes or no? If you have not filed your return. So by filing updated return, you are going to show your total income also. You are going to show your tax liability also. Understanding? Now if you have already filed your return, so in your already filed return, the total income is less. So now you are updating. You are showing a higher total income. So on higher total income, extra tax you are supposed to pay. So because of updated return, you have not paid tax, so you are going to pay tax because you did not file the return. Now updated return, you are going to pay tax. Now say you have already filed the return but have shown lower total income, lower tax, but by filing updated return, total income you are showing more, tax you are showing more. So the extra tax which you are showing, you have to pay that also. Understanding or not? Not just this tax. You will have to pay 25% additional tax or sometimes 50% additional tax. Now 25% or 50% is given in this table. See, you just remember this table. Okay. If the updated return is filed after the expiry of due date, do you have the due date of filing belated return? Do you have due date of filing revised return? Yes or no? On or before 31st December of the assessment year. So till that time you did not file your return. Updated return or the actual return? Yes or no? If till that time you have not filed your original return, then now you are going to file your return. If you have not filed at all till the due date, or you have not revised your return till the due date 31st December, you are updating that return later on. So after the date given in 139.4 and 39.5, can I say 31st December of the assessment year was the date given in these two sections? Sure. but before the completion of the period of 12 months from the end of the relevant assessment year. Meaning, see, this is your previous year, yes or no? This is your previous year. Wait. If I tell you that for this year, updated return I have to file. So what was the date? It can be filed on or before 31st March 2028. This is the last day to file ITRU. Yes or no? ITRU for which previous year? Previous year 24-25. Now see, 24-25 is gone. You are there in the assessment year. Due date is gone. 31st July is gone. You might have filed your return on or before 31st July. Hello? Did you file your return on or before 31st July? Yes. So, now you have the option to revise. If you have committed any error, you have the option to revise as per 139.5. So, till what time you can revise? You can revise till 31st December. Yes or no? So, if you revise till 31st December, then no need to file ITRU, no? No need to file ITRU. The income which you wanted to show, you can show in your normal ITR, your revised income tax return on or before 31st December. Huh? But 31st December gone. Now the time to revise is gone. Now you have the option to update the return. Now if you update your return on or before 31st March 2027, meaning within 12 months from the end of assessment year. Within 12 months from the end of assessment year. So my assessment year ends on 31st March 2026. 12 months from the end of assessment year will be 31st March 2027. So after the due date prescribed in 139.5 for revising my return, if I have already filed the return and now I have the option to revise the return, even that option is gone. So now already filed return cannot be revised also. It can be only updated. So it can be updated till what time? Till 31st March 2028. But I am updating it within 12 months. Within 12 months from the end of my assessment year. So am I updating on or before 31st March 2027 only? Yes, sir. Then whatever extra tax which I will be liable to pay as per that updated return, no, that extra tax they are going to take from me, but on that extra tax 25% additional tax will be levied. Getting my point? Because I have filed my updated return within 12 months from the end of the relevant assessment year. But what if I am filing my updated return after 31st March 2027? So now I will have to compulsorily file on or before 31st March 2028. Yes or no? So am I filing my updated return after the expiry of 12 months? Hello? Then updated return will be filed, extra tax will also have to be paid, but 50% of that extra tax will be taken as additional tax from me. Now 50% additional tax will also be taken. So on whatever total income which you have not shown, on whatever total income, the tax which you have not paid, that tax you are supposed to pay. That extra amount of tax on your extra total income, you are supposed to pay that tax because that is your normal tax which you were supposed to anyways pay. But along with that normal tax, 25% of that tax or 50% of that tax you are supposed to pay additionally. See, still you are at a benefit here because you are yourself showing this income. And if we come to know, this can go up to 100% in the form of penalty. Getting my point? Prosecution will be done, that will be separate. So if you can save yourself by paying some extra tax, additional tax on the tax which you were supposed to pay only, yes or no? So for this year, you have filed your return. Sorry, this year you have not filed your return. Come on, this year you have not filed your return. Meaning 31st July gone. 31st July gone. Yes. Have you filed your return? No. Now belated return can be filed. Belated return can be filed under 139(4) for this year. Yes or no? On or before 31st December. Now the time to file the belated return is also gone. Can you file updated return? Yes. So now in that updated return, you are going to show the total income of this year. You are going to show the tax liability of this year. Yes or no? And that tax liability you are supposed to pay. But along with that tax liability, additional 25% you are going to pay if you file your updated return within 12 months from the end of assessment year. Otherwise, it will be 50% of that tax. Additional tax amount will be 50% of the tax which you have calculated as per updated return. Yes or no? Getting my point? Now pay attention. What if you have already filed? Then you can revise 139.5. But if you have not revised, then also updated return can be filed. Now in the updated return, whatever tax you have calculated, that is your real tax which you are liable to pay. Yes or no? Out of that tax, whatever tax you have already paid, reduce. But the balance tax is on the income which you have hidden from us, no? So balance tax you are going to pay, but 25% of that, 50% of that you are supposed to pay in the form of additional tax. Plus interest will also be levied for late filing of ROI 234A. And to calculate that interest, the tax in the updated return will be considered. Calculate the amount of interest. The interest will be calculated on what amount? On the tax amount only. But that tax amount will be taken from your updated return to calculate that interest. If advance tax was supposed to be paid by you, there was a shortfall in the advance tax. So the 234B interest will be calculated. So to calculate that 234B interest also, the tax which you have calculated in the updated return will be considered. Getting my point? Everyone? So this is just the basic thing which you are supposed to read. Read it once properly, that's it. This much additional tax, this much additional tax. See, after the expiry of time available in 139(4) or 5 and before completion of 12 months from the end of assessment year, then 25%. Now furnished after the expiry of 12 months from the end of the relevant assessment year. Okay, no, but before the completion of period of 24 months, yes or no, then it will be 50% of the aggregate amount of tax, interest, etc. Whatever tax, interest, etc. you have calculated as per your updated return, no, on that entire aggregate amount of tax, interest, etc. you are supposed to pay 25% of that. You are supposed to pay 50% of that as your additional tax. Okay, now this was your 140B, how to calculate the tax on updated return. That's it. Just remember only this. Otherwise no need to remember anything. No need to read this section also. Whatever was relevant, I have already told you. This was relevant for you. That's it. The table which I have just now explained. Okay, otherwise even if you are not reading this section, no problem. Okay, now let's move on to the next part. See, this is this is read only once section, 139.9. Sometimes your return which you file, there are some defects in your return. Like, did I show you the ITR numbers? ITR 1, ITR 2, ITR 3. Those are the formats. In every return, no, there are certain schedules. There are certain pro forma. See, I'll show you. You will come to know. From the CBDT website only, I'll show you. Wait, ITR 3 is there, no? So there is a PDF. See, can you see? This is the income tax return. Okay. See, if you can see over here, there are 63 pages on the left hand side corner. See, 63 pages. See, how many pages? 63. Now, these details you are supposed to give. Just imagine how much detail the income tax department is asking from you. Okay. Now, if you are coming here, for example, if you are coming, see, part A, manufacturing account is given. Part B, trading account is given. Okay, no. Now, PNL is given. What are the things which you have debited to PNL, credited to PNL, allow, disallow, the everything which we have done, no? This is practical aspect of what we have learned. Right now, for you all, this thing is very, 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 very easy. You don't have to, download this form, print this form, and write everything manually. No, you are not supposed to do that. Everything is done by the software. When I was an article in my form where I used to work now. There we used to take these printouts of these forms. First, for every client, we used to do computations on the Excel sheet. In the Excel sheet, we are manually doing the computation. We are manually calculating the total income, tax liability, everything. We are doing the computation, proper computation, everything done from our side. Now we are going to check that things, confirm this thing with the client. Okay, that see client, the based on the details which you have given to us. Okay, no, we have calculated your total income this much was your tax liability, this much TDS, TCS, advance tax, this, that, and see, for this year, this is your tax liability which you are going to pay, or this is the amount of refund which you are going to get. Okay, we are sending you this file. Please check, please verify. If you find it okay, then give us a green signal. We are going to download this form for you. Okay, we are going to download and we are going to fill this form manually. We used to write each and every amount, okay, with pencils first, because if you write with pen, what will happen if there is some mistake? And just imagine 63 pages are there. Okay, now while manually writing these things, no, see, everywhere there is a link up. So whatever amount which is coming here, see, I tell you one thing. Okay, this is scheduled salary. Okay, now if you'll see above, the total income is calculated. Okay, here. What type of businesses you are doing, balance sheet, everything is there. Okay, now I wanted to show you one thing. Where is that? See, it is very difficult to sometimes find out the details also. Okay, now schedules to the return form, fill as applicable. What they have written, fill as applicable. Wherever the requirement is there, the fields are applicable, you are required to fill those fields. Okay, so for example, what is the name of your employer along with your business? If you are doing some employment also, So can you earn salary income along with your PGBP income? Yes. So PGBP details we have already taken from you. Okay. All the PGBP details. Okay. But now we are going to take the salary details also. There is a possibility that you are doing a business, along with that you might be earning the salary also. So give us the details of your employer. Okay. What are the nature of employers? So there will be a drop down menu. Now this is what on the income tax portal only. So there will be a drop down menu. In that drop down menu you will have the nature of your employer, what type of business he is doing and all. Okay, so what is the tan of your employer, that you are going to come to know in the TDS chapter, what is tan and all. Okay, so what is the address of your employer, what is the town or city where your employer is there, where you are doing your job. Okay, what is the state, zip or postal code. Now as per section 17.1, what he is giving you as a salary, all these details of your salary. See, everything which we have studied in the salary chapter, no, they are asking you in the form of this information. Okay, now if for example you are doing a business, okay, you are doing a business and you are also doing some employment in some company, okay, part-time employment. So along with PGBP income you are earning salary income also. Now, if you are earning salary income, fill up this schedule, no? Fill this schedule. What happened, no? You filed the entire form filled up, signed and, verified, and you have filed this form to the income tax department. Now, when the form will go to the income tax department to your assessing officer, that assessing officer will pick up the form and he will check the form. While checking the form, he'll come to this schedule of salary. Now he will find that nothing is mentioned in this form. This schedule is completely blank. So what should I interpret? That this was not applicable, hence nothing is filled? Or it was applicable and you did not give us the details? Yes or no? See, if it is not applicable, you are not working anywhere, then put a cross and say not applicable. This schedule not applicable. We used to do it like that only. Whatever schedules which are not applicable, no, cross not applicable. We used to write it diagonally. So the moment the income tax officer will pick the form, he'll come to know that this is blank because this is not applicable. But if it is kept blank without you showing that it is not applicable, then it is a defect in your return. And once the department finds out any such defect, this is one example which I gave you. Understanding? This is just one example which I have given you. So if he finds out that this is the defect, so he will tell you, he will give you an intimation that, see, for this year's return you have filed, in your return we have identified this much, this defect. One of this defect, that this salary schedule you have not filled up. You have not written not applicable also. You have not written what? Any details also. What should we understand? That you are not earning salary, hence it is kept blank, or you are earning salary or you have forgotten to give the details. This is one of the defects. Second defect can be, see, when you file this thing, okay, no? Then when you will go ahead, can I say this is the depreciation schedule, DPM, depreciation on plant, machinery, other assets. So in the PGBP calculation above, there will be an amount of depreciation which you are going to put there. So from where that depreciation amount is coming, to calculate that depreciation amount, this schedule you have to fill. You have forgotten to fill this. Getting my point? Now, coming more ahead, okay, this is depreciation, ESR, scientific research expenses. Can you see? Scientific research expense, section 35. Okay, these details are given there. Now, capital gain details are there. See, capital, these areas which are, gray areas. You cannot write anything here. You have to always write in white areas. Gray areas are not to write anything. Okay. But what you did, You wrote something and wrote in the gray area also. That is not the area to be utilized. And anything written in that gray area, we don't consider it as an information only. Then why have you written that in gray area? Getting my point? Now, if you will come ahead, no, so this entire form which you have filed, no, there is a verification also which has to be done. Verification means, I'll tell you, signing. It will be in the end. See, can you see verification? This, what is written? I, meaning here your name should come. I, Umang Shekhar Thakkar, son or daughter of, okay, following person, solemnly declare that to the best of my knowledge and belief, the information given in the return and the schedules thereto is correct and complete and is in accordance with the provisions of the Income Tax Act 1961. I am declaring that. This is my declaration which I am giving. So who is giving this declaration? Assessee himself, no? Okay. So the name of the assessee should come here. The name of the assessee should be coming here. I have forgotten to give this name. My signature should come here. The date should come here. The place should come here. Okay, no? See, now everything, every detail which they are asking is relevant. Earlier, when we used to write down these things, no, there were cases when any detail we have missed out. Sometimes we will go and see the first page is there, no? So the first name is there, middle name is there, last name is there. It is very important to write your permanent account number. Okay, what is your status, individual, HUF, then what is that? All these details must be complete. What is your date of birth, what is your date of formation if you are a company, etc., form, etc., yes or no, area, locality, these details must be furnished. Now if you forget to write down any details, so there is some defect. See, this much big form is there, there can be any damn single thing which you forget or you don't write, which they want and you are not giving them. So any such defect, if they identify in your return, without that they cannot assess based on this return, yes or no. So they will intimate the office, they will intimate the assessee that assessee, in your return filed under this section, either it is belated return or it is revised return or it is 139(1) normal return, you have filed your return under this section as on this date, this return was filed by you, in this return this defects we have identified. Please rectify these defects within 15 days of our intimation. So you are given 15 days time to rectify the defect in the return and file a new return to replace this defective return, yes or no. So if you rectify the defect within 15 days, okay. See, sometimes the assessing officer can extend that time also, but normally 15 days time is given to rectify the defect, okay, no. Defect must be rectified within 15 days from the date of intimation, the date on which the intimation was given to you, the date on which they are communicating, no, the date on which you came to know, the intimation was made to you. So now today the intimation given to you, today you know na that these are the defects. From today within 15 days, from today within 15 days, from the date of intimation within 15 days, rectify all these defects and file your return. Sometimes you can ask the assessing officer to extend the time a little bit. He can extend the time also. If you rectify the defect within the 15 days or extended time, then okay, then no problem. But if you fail to rectify the defect within 15 days or the extended time, as the case may be, it will be assumed as if you have not filed your return. This return we cannot process. And we gave you the time to rectify the defect and file the fresh return. No, you did not do this. So we will assume as if you have not filed the return, and all the provisions of non-filing of return will be made applicable to you. penalties, fees, etc., etc., will all be applicable to you. Understanding? So earlier, no, there used to be too many defects. Okay, this case is happening, there is a defect. This is happening, there is a defect. So the list of defects were also given under 139.9. Now everything is, computerized, software based. If you feed a few details in the software, no, that software automatically is linked with the income tax forms. Automatically one or two details you are supposed to, feed in the software. Rest everything the software does. That entire manual work which we used to do, computing the total income, computing the tax liability, rebate, surcharge, this, that, on the Excel sheet. Now all thing is done by that software. And a printed format, PDF format of your return, which is filed there, will be in front of you. See, these are the details. Based on the details which you are putting in the software, these are the things coming in front of you. Okay. So this is this, this is this, this is this. You want us to proceed further and file it on the income tax portal? Yes. So if you confirm, if you press the confirm button that the details which are coming in front of you are okay. Okay. You will press the confirm. So this software will be linked to your income tax portal. The moment you have put your ID password in the software will automatically log into the income tax portal, and automatically whatever details furnished by you will be converted into return and will be filed on the portal. Now there will be a message coming on your mobile phone. OTP. Feed that OTP, and the last page which verification I saw, no? Earlier it was a physical verification. Physical verification means the last page which you can see. This you actually have to write your name, place, date, etc. You have to sign also. Now these physical things are not required. The moment the return is uploaded, okay, so you have uploaded it. What is the proof that you have uploaded it? Wait, the return uploaded from there on your registered mobile number, which will be associated with your PAN and Aadhaar. Yes or no? That on that registered mobile number, an OTP will come. That OTP you feed in that portal, your return filed. There will be a message. There will be ITRV. ITRV means acknowledgement. Acknowledgement will come in front of you. That acknowledgement is a proof that you have filed your return for this year, and we have accepted it. Now they will process their return from their side, and all the processing will be done online. AI and everything is involved now. So now everything is linked. All the financial transactions everywhere is linked. Now everything is going digital, no? So the return given electronically, all the electronic data available against your PAN will be matched against this. AI systems are working, and if there is some discrepancy, automatically a letter will be printed for you, a love letter, asking you to come and explain why these discrepancies are there. Getting my point? So this is very interesting. If you will go in the final, no, this entire thing is very interesting. Okay, so how the things are actually happening when provisions regarding return filing, after you file the return, what happens, how they assess, how they reassess, when the search party comes to your house, what they do while doing the search and all. Everything is very interesting. Okay, no? But to know all those things, you must be aware about these things, provisions. Okay, understood? This is basic which you are doing. So defective return, there can be a defective return also. Okay, so whatever defective return is there, I have already told you, just read this part once. That's it. No need to get into detail. This section is not asked in the exams. Okay. At the most, what can be asked? Can there be a defect in the return? Yes. Who will communicate that defect? Your assessing officer. And after communicating that defect, within 15 days of the date of intimation to you, you have to rectify that defect and file your return. If you don't do it, then you can ask for the extension also for some days. He can extend, but in the extended period also you don't rectify your defect and don't file the fresh return, then it will be as good as you have not filed your return, and provisions for non-filing will be automatically made applicable. Okay, this is 139.5. 234F. See, I told you the due date of filing the ROI. Can you see the due date of filing the ROI? What is the due date? 31st July 2025. If you don't file your return on or before the due date, so you can file a belated return on or before 31st December. Yes or no? Meaning you are delaying in the filing of ROI. Or you have not filed your return only till 31st December. Belated return due date is also gone. So if you don't file your return on or before the due date, or not even before the due date of filing belated return, you have not filed your return only. Now whenever you will file, no, whenever you will file, 234F fees you are supposed to give at that time. Or for example, you have filed but as a belated return you have filed. You have not filed on or before the due date. After the due date you are filing. Meaning on or before 31st December you are filing. But still there is a delay in filing your return, no? So there is a default in filing the return. What default? Either the return is not filed at all, or the return is filed but it is filed on or after the due date of filing. So for that default in filing the return, a fees is charged. Fees under section 234F, flat 5,000 rupees. How much? Flat 5,000 rupees will be charged. But wait, if your total income does not exceed 5 lakhs, then the fees, still we will be charging a fees. Because see, we don't want you to be lethargic. Even if your total income is less than 5 lakh, you are liable to file your return. No, why you did not file? Or you have filed, then why have you committed a delay? So we are not going to leave you also. You are also going to pay the fees. But the fees which we are going to take from you will not be 5,000. It will be only 1,000. So 234F is the fees which you have to file, which you have to pay if you don't file your return or you are filing the return after the due date. There is a default in furnishing the ROI. For the default, 234F fees is there, 5,000 rupees flat. But if your total income does not exceed 5 lakh, then the fees cannot be 5,000, it will be 1,000 only. Will you remember this? Sure. So this is 234F. We are going to see this again with advanced tax provisions. Yes or no? Now permanent account number. See this entire thing, PAN. What is permanent account number? You will get it here. Permanent account number is, wait, what is a permanent account number? Permanent account number is a alphanumeric code. What do you call it? Alphanumeric code. Alphanumeric code means alphabet will also be there and numbers will be also there. So it is a 10 characters. 10 characters. Characters means combination of alphabets and numbers. 10 characters code. Okay. So for example, it is AHTP. Wait, AHXPS 5 alphabet 7323. Okay. How many alphabets you can see? 6 alphabets and 4 digits. 6 plus 4, 10. Alphanumeric code. This is unique for all the assessees. So two assessees will not have same PAN number. Your PAN number will be different, my PAN number will be different. Okay, no? Because your identity is different, my identity is different, no? So to identify the assessee, this is a code given. Now whenever the income tax department will feed the code in their system, now your entire details will come in front of them. All the financial transactions where this PAN was quoted. What is your area, where you are living, okay? If the company is there, the state of incorporation, every detail will come in front of the income tax department. But first you will have to get yourself identified with them as an assessee. So whenever you are going to get yourself identified with the income tax department as an assessee, at that time a unique number is given to you. That unique number is known as permanent account number. Okay. So now when you are supposed to compulsorily go to the income tax department and tell them, department, I want to become the assessee. You want to become? No. There is a compulsion that now you have to become an assessee. So you are compulsorily required to apply for PAN. So which are those assessees? Which are those cases where you are supposed to compulsorily apply for PAN? If you are not having a PAN already, you have to compulsorily apply for PAN in all these cases. See, how many cases are there? 4 cases are there. Can you see? In all these 4 cases, if you are covered by any of these cases and you were not allotted a PAN earlier, then you have to compulsorily apply for the PAN. And within the time which is given in the second column. Yes or no? Within this much time, if you are covered by this case, then within this much time you have to compulsorily apply for PAN. If you are covered by the second case, then within this much time you are supposed to compulsorily apply for PAN. Okay. There can be a 2 mark small question based on this case study. They will put a case study and any of these 4 cases they will bring in front of you in that case study, and they will ask you that as per the provisions of the Income Tax Act, tell us that whether this person is required to apply for PAN or not. If yes, then within how much time? Okay, so these 4 cases must be remembered by you, must be remembered, very important cases. Okay, so what they are trying to tell, every person, if his total income exceeds the maximum amount which is not chargeable to income tax, the maximum amount which is not chargeable to income tax, we call it basic exemption limit. So the moment your total income for this year or the total income of other person for whom you are assessable, yes or no? So the moment your total income exceeds the basic exemption limit, meaning are you liable to pay tax now? And if you are liable to pay tax, you will become an assessee. Go and compulsorily apply for PAN. Within how much time? After the end of the financial year, on or before 31st May of the assessment year, you are supposed to apply for PAN. So you have calculated your total income. You came to know, bloody for this previous year, my total income is now more than my basic exemption limit. So after the end of previous year, you are going to calculate your total income. So calculate fast, calculate early, because if for this previous year your total income was more than your basic exemption limit, then on or before 31st May of the assessment year, you have to compulsorily give the application to your assessing officer to issue a PAN to you, issue a permanent account number. Will you remember this first case? Second case, they are saying every person carrying on any business or profession whose total sales, turnover or gross receipts are likely to exceed 5 lakh in any previous year. Meaning that if you are doing any business or any profession and if you feel that in this year the turnover of your business or the gross receipt of your profession, it is likely to be more than 5 lakh. If you feel, even if you feel that it is more than 5 lakhs, it is going to exceed 5 lakhs, They are not talking about the profits, they are talking about the turnover. They are talking about the gross receipt. Then, before the end of that financial year, compulsorily take your permanent account number. Even before that year gets end, apply for the permanent account number. Yes or no? It is compulsory for you. And we come to know that you have not applied in the previous year, you have not applied in the financial year, and later on you are applying, then you are gone. Apply for the permanent account number. Yes or no? Now, if you are a resident other than individual, meaning you are not an individual but you are a resident who enters into a financial transaction of an amount aggregating to 2,50,000 or more in a financial year, meaning that you are a company, you are a firm, yes or no? So any financial transaction means receipt, payment, everything is covered, yes or no? So during the financial year, if you are entering into financial transactions in total, which is 2,50,000 or more, you are not an individual, you are any other person. So for any other person, we are telling that if during the financial year you are entering into financial transactions of 2,50,000 or more, then after the end of that financial year, on or before 31st May of the assessment year, you are supposed to compulsorily apply for PAN. Yes or no? Now every person of that person, every managing director, CEO, director, etc. of that person. See, here we are talking about whom? Here we are talking about company, firms, AOP, BOI. Okay, then we are talking about HUF, etc. So if during the financial year their financial transactions are 2,50,000 or more, they have to compulsorily apply for PAN. And their director, managing director, CEO, member, partner, etc., every one of them should also apply for PAN. Okay. Within how much time? Within the time given to them. Given to the person referred to in point number 3. How much time? 31st May of the next year. Will you remember this, sir? Everyone? Sure, no? Okay. Now, every person who has not been allotted a PAN and intends to enter into such transaction as prescribed by the CBDT. Okay, CBDT will prescribe certain transactions. You don't have a PAN, but you want to enter into such financial transactions which are prescribed by CBDT, and CBDT has prescribed them in rule 114BA. If you want to enter into such transactions, see, is it written over here? Then, while entering into these transactions also, you have to compulsorily apply for PAN 7 days before entering into these transactions. Getting my point? Now, if you want to deposit cash amounting to 20 lakhs or more in your bank account, yes. So before depositing, apply for PAN. Before depositing only you have to apply for PAN. Okay, no? And how much time before? At least 7 days before the date of such deposit. Okay? Or every person who intends to withdraw cash. Now, forget about deposit. Even if you withdraw 20 lakhs or more from your bank accounts, yes or no? Then, before the withdrawal, you have to apply for PAN. Within 7 days. At least 7 days before that withdrawal, because of which your withdrawal becomes more than 20 lakhs. So you have been withdrawing. So cumulatively total withdrawal has not been more than 20. Till that time, there is no requirement of obtaining what? PAN. But the moment you know that now whatever withdrawal I will make, and as a result of that withdrawal, now the withdrawal will be total how much? More than 20. Then before making that last withdrawal, because of which it will be more than 20, before that last withdrawal. For deposit also it is the same thing. You have been depositing. You are not supposed to apply for PAN. The moment you will make the last deposit, and because of this deposit, now it is supposed to be 20 lakh or more. Then, before making this deposit, prior to this, within 7 days, 7 days is the time given. At least 7 days prior to such deposit, at least 7 days prior to such withdrawal, you are supposed to obtain a PAN if there was no PAN with you. Okay. Next one. Any person who intends to open a current account or a cash credit account with a bank or a cooperative bank or a post office. You are opening a current account or a cash credit account in a bank. The bank is not going to open your bank account, current account, till the time you are not having a PAN. So obtain the PAN at least 7 days prior to opening such current account. Now see, this was your rule 114 BA. Okay, now this rule will be applicable in all the cases. But there are certain exceptions. See, what if the government wants to withdraw or government wants to deposit? So will the government have to apply for PAN? No, there is no requirement for the government. So there are exceptions given. Yes or no? So what are the exceptions? Where the person making the deposit or withdrawal is a non-resident. See, now there is a specific exclusion of non-resident other than a company or a foreign company. So these deposits or withdrawals are made by whom? A non-resident, non-corporate non-resident or a foreign company. But these deposits or withdrawals must be by way of any other mode, which is not a cash. Okay, no? So if a non-resident or a foreign company is withdrawing or depositing more than 20, not required to apply for PAN. Why? Because it is not in cash. Okay, what they are saying? Otherwise than by way of cash. And along with this, see, this is a cumulative 3 conditions. All the conditions must be fulfilled together. Okay, and the withdrawal or deposit is in any IFSC banking unit. IFSC, you know, International Financial Services Center, Gift City. So if the bank is located in IFSC, in that bank branch, if this deposit and withdrawal is happening, and they do not have any income chargeable to tax in India, if all these 3 conditions are fulfilled. So the non-corporate non-resident or a foreign company is there, non-corporate non-resident or a foreign company is there. Okay, they are depositing or withdrawing money. They are depositing or withdrawing money more than 20 lakhs or more. But that is otherwise than by cash, not in cash. And this withdrawal and deposit is happening in IFSC banking unit, and they are not liable to tax in India. Then why are you bothering them to obtain the PAN? And even if they will obtain the PAN, what are you going to do with their PAN? They are not accessible to tax in India, no? Hello, sir. So don't bother them. No need to apply for PAN by these type of persons. Yes or no? In case of these transactions. Understanding? Now, the central government is empowered to specify by notification or any class or classes of persons by whom tax is payable under the Act or any tax or duty is payable under any other law to apply within such time as may be mentioned in that notification. Full time pass. Central government can notify a class or classes of persons that you should also obtain PAN within this much time. So in the notification only, the class or classes of person will be notified, and within how much time they have to, apply. In that notification only it will be given. Hello, sir. Provided they are liable to pay income tax or tax as per any other law. Understanding? Now, the central government for the purpose of collecting any information which may be useful for the relevant for the purpose of this law. CG may notify any class or classes of person within the prescribed time to apply for obtaining PAN. See, sometimes the CG will tell you to obtain PAN because you are liable to pay tax. So certain class or classes of person, if liable to pay tax, so CG will notify those class or classes of person to obtain PAN within this much time. Or the CG might also notify certain class or classes of person that you all please within this much time obtain the PAN, because there are certain relevant informations from you which we have to gather. So to obtain the information from some persons, they are compulsorily required to obtain the PAN. And by obtaining the information from them, it will be useful for us to make the assessment for other persons also. Yes or no? So some person, some class of persons can be notified based on this also. Now the assessing officer, having regard to the nature of transactions as may be prescribed, may also allot a PAN to any other person whether any tax is payable by him or not. If the assessing officer, based on some transactions which are prescribed, yes or no, based on looking at those transactions, if the assessing officer also feels that no, this person should be identified, this person should be allotted a PAN, he can himself suo motu. You know suo motu? Meaning on his own, the assessing officer can also allot you a PAN. Getting my point? Everyone? See, these are all not time pass points. Read once, forget. Read once, forget. Okay, no? The point which was relevant was these points. See, when it is compulsorily liable, under what transactions the PAN is compulsorily required to be obtained. See, these are the transactions. If you enter, then you have to compulsorily apply for PAN. If you don't have a PAN, apply the PAN within this much time. Okay, no? Now see, now they are saying any person other than the persons mentioned in 1 or 4 above may apply. May apply means voluntary. Are you compulsorily liable to obtain the PAN? No. But still, if you make an application, no, assessing officer will have to issue a PAN to you, compulsory. But you are not compulsorily required to obtain the PAN because you are not covered by point number 1, point number 4. So if you are not covered by point number 1, point number 4, hello sir, you are not covered by point number 1, point number 4, that means definitely you are not required to apply for the PAN. There is no compulsion on you. But you are yourself voluntarily making an application that you want a PAN. Hello sir. Then the assessing officer can voluntarily allot a PAN to you. Yes or no? So now in the examination they will ask, you are not compulsorily required to obtain a PAN as per 139 AA. Assessing officer wants you to compulsorily make an application to obtain a PAN because you have paid rupees 2 lakh rupees fees of your son to a school. Any bullshit reason they will give, and you will think, oh my god. See, if you have not studied this section properly once, you will feel that no, he should apply. If as per 139 AA you are not compulsorily required, then the assessing officer, if he feels that based on the nature of prescribed transactions, is it a prescribed transaction? You will have to see the list now. Now the list is going to come. Wait, after some time that list is also going to come. But based on that prescribed list, if he is of the opinion, then he can allot on his own. Otherwise, he does not have the authority to issue a PAN to you. He cannot compel you to compulsorily apply for PAN. However, voluntarily you can on your own apply for the PAN. Yes or no? Getting my point? Can you have more than one identity? Can you have more than one identity? See, I am in this attire right now. In this attire, who is the person? Myself only, no? If I change my attire, the person will change or the person will remain same. So I cannot have two identities. Hello, I can have two attires, but I cannot have two identities, no? So an assessee, if he has already allotted a PAN, hello, that is his identity. He has already been identified by the income tax department. So now he does not have to apply again. These provisions are made for those persons who have not yet applied for PAN. So when it is compulsory for you to obtain your PAN, if it is not compulsory, you are not having a PAN, can you voluntarily go and apply for a PAN? Yes, that is also allowed. Getting my point? And it is a 10 alphanumeric characters. I have already told you. Okay. Next one, obtaining. Now it is obtaining or quoting. Whatever provisions we have right now studied, no, that is about obtaining a PAN, taking a permanent account number, getting yourself identified as an assessee. But once you have obtained the PAN, now there is a requirement on you to quote your PAN also. If you don't have a PAN, apply for the PAN and quote your PAN in the case of these transactions. Hello, sir. So obtaining is a different aspect, quoting is a different aspect. You can quote a PAN, you can say your identity only if you have been identified, no? So first you get yourself identified, obtain a PAN. And why we are telling you to obtain a PAN? Because in these transactions which are going to come in this table now, okay, no? In these transactions, whenever you are going to perform such type of financial transaction, compulsory you will have to quote your PAN. Compulsory you will have to quote your PAN. Without your PAN, you will not be able to perform such financial transactions. So in case of these financial transactions, you will be spending your income in these financial transactions. Income you are earning, and that income which you are earning, you are spending your income in these transactions. So whenever you are going to enter into these transactions, no, the person with whom you are entering this transaction, he will ask you to pay the ask you to tell your permanent account number. If you are not able to quote your permanent account number, if you are not able to show your identity, maybe you will not be able to do these type of transactions. Getting my point? The first transaction is sale or purchase of motor vehicle. Whenever you go, other than two-wheelers, please mention, see last point, other than two-wheeler. Any motor vehicle you buy, other than two-wheeler, you have to compulsorily quote your PAN. In the purchase documents which will be made, no, your PAN will be quoted. Without PAN, the car dealer or the truck dealer, etc., with whom you are buying that vehicle, he will not sell you that motor vehicle. To purchase the two-wheeler vehicle, it is not required, but any vehicle other than two-wheeler, it will be required. Your PAN will be required. So you have to compulsorily quote your PAN. So just imagine if you want to buy a motor vehicle and you don't have a PAN. So first thing you will have to apply for a PAN, get a PAN, and then you will have to quote a PAN in this transaction. Only then you will be able to buy. Otherwise you are not able to buy that also. Okay, no? Next one, opening account other than time deposit account, referred in serial number 12. Serial number 10 you will come later on. In serial number 12, there is a time deposit account written. Other than that time deposit account, any account you are opening, okay, and a basic savings deposit account other than that. So there are two accounts. For a time deposit account in serial number 12 and basic savings deposit account. In these two cases, the point number 2 is not applicable. In these two cases, point number 2 is not applicable. Other than these two, any other account you are opening with a bank or a cooperative bank or even a post office, yes or no? Compulsory to open that account, you have to quote your PAN. Without that, you cannot open such accounts. Getting my point? Hello? Now, making an application for issue of credit card or debit card. So if you want the bank to issue a credit card to you, if you want the bank to issue a debit card to you, so whenever you will make an application to issue a debit card or credit card, in that application compulsory your PAN must be quoted. Without PAN, you will not be allotted a debit card or credit card. Okay. Opening a demat account for buying and selling of shares. Every demat account, compulsory PAN must be, communicated. Next one, payment of hotel or restaurant. Payment to a hotel or restaurant against a bill or bills at any one time. See, one bill you are paying or multiple bills you are paying, but you are making a payment one time. So you are making a one-time payment of one bill or one-time payment of multiple bills together to any hotel or restaurant. And if that bill which you have paid is in cash, which is amounting to more than 50,000, so that restaurant or hotel is going to ask for a PAN from you. Without PAN, they will not accept the payment. It is good, no? You'll have to wash the dish in that case. Just imagine in a hotel or in a restaurant, if you can pay one bill more than 50,000 or multiple bills taken together amounting to more than 50,000 at once. Don't you think you are not a small person, you are a big person earning income and spending your income like this? The details of a person like you should go to the income tax department. So the moment you will give your PAN to the hotel, no, hotel will give that detail to the income tax department. Now income tax department comes to know, oh, this fellow spending too much on what? Hotels. More than 50,000. Very good. Let us keep an eye on him. His return he has filed. Show us, your nil return. How come? Immediately a love letter will come. So to do all such things, you should be identified, you should be having a PAN, and you will be compelled to quote your PAN in such cases. So you say no, from where the income tax department comes to know that where we are earning from, they come to know from these things. Understanding? Your PAN is basically for these things. Now see what they are doing. In cash, if you are making a payment of more than 50,000 for travel to any foreign country or purchase of any foreign currency at one time payment of more than 50,000 in cash. One time payment of more than 50,000 in cash for foreign travel or for purchase of foreign currency. Yes or no? That time also compulsorily PAN must be required. More than 50,000 payment for purchase of mutual fund units. More than 50,000 payment for purchase of debentures or bonds of any company or institutions. Yes or no? So bonds or debentures. See, these are the limits you have to remember, and every transaction you have to remember. They are going to give you 4 or 5 transactions in front of you, and they are going to ask you that whether in this transaction you are required to quote your PAN or not. Yes or no? So all these transactions one by one we are supposed to please remember. Please remember, I am telling you. Okay? Because in the examination, if this much easy thing is coming and going to give you 2 marks straight away, then why don't you remember all these things? Yes or no? And even if I don't speak anything about these, no, you'll be able to read and now remember all these things. Okay? Now, next one. They are telling you that okay, you are making the payment more than 50,000 to RBI for acquiring RBI bonds. Yes, you are buying RBI bonds for more than 50, and one time payment more than 50 you are making to RBI to purchase those bonds. You are making a deposit with a banking company or a cooperative bank or a post office. What type of deposit? Any type of deposit you are making, and that is a cash deposit. Cash amount you are depositing in savings account, cash amount you are depositing in fixed deposit, yes or no, and that amount is more than 50,000 in a day. In one day you are depositing more than 50,000 in any bank, cooperative bank, or a post office. Then also compulsorily PAN must be quoted over there. Purchase of bank draft or pay order or banker's check in cash amounting to rupees more than 50,000 in a day, yes or no. Now, time deposit with any banking company, cooperative bank for an amount which is exceeding more than 50,000 or aggregating to more than 5 lakh during a financial year. This is a financial year limit, 5 lakhs. So 5,000 more than 50,000 deposit you are making, then also. But what if not more than 50,000? Less than 50, less than 50, less than 50. Multiple deposits you are keeping. And in a financial year, if the total is more than 5 lakhs, then also you are supposed to quote. Compulsory. Yes or no? Now, with a post office also you can keep this deposit. With a Nidhi company also you can keep this kind of deposit. With a deposit accepting NBFC, you can keep such deposits. Yes or no? This point number 13 is time pass. Ignore. Point number 14. You are paying life insurance premium more than 50,000 in a year. Then you are selling and purchasing the securities other than shares. Other than shares. You are selling and purchasing the securities amounting to rupees more than 1 lakh per transaction. This is not the yearly limit. This is a per transaction limit. If per transaction you are selling or purchasing what securities other than shares, and the amount of that transaction is more than 1 lakh, then you are buying and selling of shares of a company which is not listed, for that also 1 lakh rupees limit is given. So for securities also per transaction more than 1 lakh, and for shares also per transaction more than 1 lakh, but the shares should be unlisted. Because if they are listed, they are going to come in your demat, and at the time of opening a demat you have already given your PAN. Yes or no? So your PAN is already known. No need to worry. Hello sir. Next one. Sale or purchase of any immobile property for an amount which is more than 10 lakhs. So if the purchase value is more than 10 lakhs, then also the PAN must be given. Or if the purchase value is not more than 10 lakh, but the stamp duty value may also be more than 10 lakhs. Hello sir. Sometimes under the sale agreement you suppress your purchase value, no? But the stamp duty value cannot lie. Stamp duty value is saying more than 10 lakhs, then obviously you are supposed to furnish your PAN. In every sale deed, sale agreement, you will see the PAN of buyer and seller both. Without PAN, that sale agreement is incomplete. Yes or no? Next one. Now this 18th point is a Brahmastra. This is a Brahmastra point. They are saying sale or purchase by any person of any goods or services of any nature other than those specified in 1 to 17 above. So 1 to 17, whatever goods and services they have spoken, for that whatever limit is there, that is okay. But other than those goods or services which are specified in above 17 points, there also you have to compulsorily quote your PAN if the amount exceeds 2 lakh per transaction. So whenever you go to buy jewelry, in jewelry shop, and if you buy a jewelry of more than rupees 12 lakh, that jeweler will take 2 lakh, take your PAN. Only then he can sell you the jewelry, or he will tell you, if you are buying a jewelry of 3 lakhs, no, don't buy the entire jewelry on your name, otherwise you will have to give your PAN. Buy 1 lakh 50 on the name of your father, buy 1 lakh 50 on the name of your mother. Oh, you are buying 5 lakh rupees. So do one thing. Buy a jewelry of rupees, exact 2 lakh on your name, exact 2 lakh, not more than that. Because if it is more than 2 lakhs, compulsory, what will happen? PAN will have to be quoted. So 2 lakh on your name, 2 lakh on the name of your father, and 1 lakh on the name of your mother. Every transaction they are saying, every transaction, not during the financial year. Okay. Now see, if all these 18 transactions which are specified above, if the minor is entering into these transactions, no, then minor has to quote the PAN of his parent for these transactions. Okay. Hello, sir. And declaration up by a person not having a PAN. For example, you are entering into any of these 18 transactions. Okay, no? But you are not compulsorily required to obtain a PAN. Then just to enter into this transaction, why would I obtain a PAN? I will not obtain. So do one thing. If you are entering into these transactions, no problem, no problem. You enter. You don't have a PAN, no? Just give a declaration in form number 60. Form number 60, a declaration must be required that you are entering into any of these transactions. See, whenever you go to a bank, no, okay, you are going to a bank and you are depositing more than 50,000 in a bank in a single day. So the bank people will ask you that in your deposit slip, write down your PAN. So you are saying I don't have a PAN. So they will take out form number 60 declaration form and give it to you. So if you are not quoting your PAN here, then write down, fill this form number 60, only then we will accept that deposit from you, otherwise not. So any of the above transactions you are entering and you don't have, if you have PAN, so you have to compulsorily quote the PAN. But if you don't have PAN, either you obtain a PAN and enter into these transactions, or if you don't want to obtain that PAN, then do one thing, furnish form number 60 declaration. Done, sir. Now pay attention here. However, in case of a foreign company who does not have any income chargeable to tax in India and does not have a PAN and enters into the transaction referred in serial number 2 or 12 of the above table in an IFSC banking unit, it has to make a declaration in form number 16. See, this year, no, this has come as amendment. This has come as amendment. So this same thing, don't you think you have seen above? Above. See here. This point we have already covered. Can you see this point? Same point. Now for rule 114BA transactions, you are not supposed to what? You are not supposed to make an application for PAN. No problem. If point number 2 means this point, opening an account, or point number 12, time deposit. If point number 2 and point number 12, opening an account with any bank or depositing any amount with a bank, time deposit, etc., yes or no, but you are doing it in any IFSC banking unit and you are not having any taxable income in India, then being a non-resident or a non-corporate non-resident, we are not going to pull you to this thing that apply for PAN and all. Don't apply for PAN. Just give a declaration under form number 60. Done, sir? Will you remember this? Okay. Now non-applicability of rule 114B. See, whatever transactions which we have seen, no, all these transactions are given in rule number 114B. These are the transactions which are given in rule number 114B, and the above transactions which were there, this table, see this table, this was 114BA. So these are the additional transactions which are prescribed. Getting my point? Okay. Now rule 114B is not applicable. They are saying rule number 114B will not be applicable. In what cases? In the following class or classes of persons, namely point number 1 and point number 2. Please read it. Please read. CG, SG or counselor office, they will deliberately give these transactions to you and deliberately tell you that a counselor office is purchasing a motor vehicle other than two-wheeler. Point number one, can you see? Motor vehicle of any value, all the transactions of motor vehicle, you have to compulsorily apply PAN. And you have to compulsorily quote that PAN also. But if you don't have, you can give what? You can give form number 60 declaration also. Yes or no? But that entire rule 114B, the transaction, limit, quoting of PAN, this is not applicable in case CG, SG or counselor offices enter into such transactions. So some counselor office, US consulate office, they are buying a car from a car dealer. That car dealer is continuously asking for PAN, give us the PAN, give us the PAN. And the consulate office is saying that we don't have the PAN and we are not required to apply for the PAN also. So we are not going to quote. So they are telling to file a declaration in form number 60. They are saying that we don't have form number 60. We are not going to file form 60 also. Because rule 114B not applicable on us. Yes or no? Now next one, any non-resident referred to in section 230 in respect of transactions other than transactions referred in 1, 2, 4, 7, 8, 10, 12, 14, 16 or 17. Other than these transactions. So you are going to see those serial numbers. In that serial number, for example, serial number 1, if we say motor vehicles, okay, other than motor vehicles transaction, other than point number 2 transaction, other than point number 7, 8, meaning in these transactions even a non-resident will have to apply for PAN, yes or no? But if you are a non-resident not entering into these transactions, you are entering into other transactions which are given in that table, then you are not required to apply for PAN. Go. Non-resident will apply. Non-resident will apply in transaction number 3. Non-resident will apply in transaction number 5 and 6. Non-resident will apply in transaction number 9. Non-resident will apply in transaction number 13. Non-resident will apply in transaction number 18. But in these transactions, non-resident is not required to apply for PAN and not required, in these transactions, non-resident, I said the other way, in these transactions, other than these transactions, non-residents are not required to quote PAN. Meaning, if I say, please pay attention, transaction serial number 3, then 4 is written, no, 5 and 6, then 7, 8 is written, 9, 10 or 11, 10 or 12, then 11 is written, then 12 is okay, 13, 14, 15 is done, 16, 17 is done, 18. So now, in these transactions, in the transactions which I have highlighted, they have to apply for PAN and quote for PAN, even they are non-residents. So in all these transactions, non-resident to apply and quote what? PAN. But if you are a non-resident, you are entering into these transactions, okay, quoting of PAN not mandatory. Getting my point? But this is for non-residents only, okay? Please remember. Now meaning of certain phrases ignore. Change in the address or name. Read point number 8 properly. Whenever you are going to apply for a PAN, there is a form. there is a form number 49A, that you have to apply. See, I'll tell you. Can you see form to apply for PAN? What is the form number? Form number 49A. So there is a format which is prescribed. In this format, the application can be made. So download this form, fill up this form along with your KYC documents, along with your address proof, this, that, you are supposed to file the PAN form. When you will file this form, no? So in this form, there are certain details which you are supposed to give. Your name, your address, the nature of business you are doing. Okay. So based on these details, an identity is given. Now there is some change in the details, basic details on the basis of which you have been identified, you have been allotted the PAN. So if there are some change, see, for girls, no, when they get married their name changes, so they have to go for updation of their PAN. Their even location changes. Earlier they used to stay with their parents, now she is going to stay with husband, so address will change. Yes or no? Sometimes the registered office of the company shifted from one place to another place. Possible, no? So the details on the basis of which the PAN was allotted, if there is any change in those details, what will happen? You will have to intimate such change to the assessing officer. So form number 49A is an application. Application to apply. Apply for PAN, permanent account number. And in this form number 49A, whatever address, name, nature of business, etc. you have given, in any of such particulars there is a change later on, so you'll have to inform that change, intimate that change to your assessing officer also. Yes or no? Now every person, this is also, now see, you are obtaining your PAN, you are quoting your PAN, but in certain transactions you are supposed to quote the PAN, no? So what if you befriend that person who has come, with whom you are entering into that transaction? You have befriended him, you have told him, be my friend, we'll become friend and I will enter into this transaction with you, don't ask for my PAN. Even that fellow will be gone. The person with whom you are entering into that transaction, he will have to make sure that you have quoted your correct PAN and the PAN is authenticated, belongs to you only. He will have to make sure. Understanding? So you obtain, you quote, for you the provisions are over now. Now they are saying every person who receives any document relating to any transaction cited above shall ensure that PAN or the Aadhaar number is duly quoted in the document. You have to ensure. No, sorry, you don't have to ensure. That person with whom you are entering, that jeweler from whom you are buying what? The jewelry, whose value is more than 2 lakh. The jeweler will have to ensure that in every document which he is going to issue to you, bills, etc. Yes or no? In every document he has taken your PAN and you have quoted it. Okay, he will have to make sure. If he is not doing it, no, there are, penalties. Please pay attention over here. See, can you see this table? Penalty table. Check. These are the penalties which are levied. Cash deposit or deposits 20 lakhs or more. Okay. Wait, not this table. Power to make rules. Wait. Yes, default. Yes. Failure to comply with the provisions of section 139A. Please check. a flat penalty of rupees 10,000. You were liable to apply for PAN. Did you apply within the given time? No. 10,000 rupees penalty. You were liable to quote. Did you quote? No. 10,000 rupees penalty. See, failure to quote the PAN or Aadhaar number, then 10,000 for each such default. Everywhere, wherever you are supposed to quote your correct PAN, quote your correct Aadhaar. Everywhere you have quoted, you have entered into 10 transactions. All the 10 transactions you have quoted wrong, or you have not quoted only. Every transaction where you have committed such default, for every such default, 10,000 rupees. Quoting, not quoting, or wrongly quoting, gone. 10,000 rupees default per default. Then knowingly quoting or intimating number which is false, you have to quote your PAN only. So quote it correctly. Quote your only. You are quoting someone else's PAN, or you are quoting a wrong PAN which does not exist, only 10,000. Then quote the PAN or Aadhaar number. Failure to quote or authenticate will result into 10,000 again. Now failure to ensure that PAN or Aadhaar number is duly quoted in the documents. Now this is not on you. This is on the person with whom you are entering into that transaction. If even that person fails to ensure that the PAN you have quoted and PAN is authenticated, it belongs to you only, he has to first ensure. Understanding? But if he forgets to ensure, if he does not ensure that, then he will also be liable to pay a penalty of rupees 10,000. Getting my point? Now they are saying that if there is a failure to ensure that the PAN or Aadhaar number has been duly authenticated in respect of transactions under 139A 6A. See, these are the 139A 6A transactions. This is 139A 6A. Okay. Now see, just imagine how big this provision is, 139AA. It has started, or it is not ending only. Okay. You just have to read this provision once properly. That's it. Okay. Whatever is there, I have highlighted. Okay. All these things. If you want, I will share this sheet with you today itself, because the highlighted part should reach you. Okay. I will share this sheet. Now pay attention. Where were we? Yes. Now again, intimation of PAN to person deducting or collecting at tax at source. See, in the next chapter now, which we are going to start, that TDS TCS tomorrow. Okay. So in the TDS TCS chapter now, there is a requirement that a person who is paying, the person who is making the payment, he has to deduct the tax. So he is a payer making the payment of tax, making the payment to the pay. So he will have to ask for the PAN of the payee. If he does not, if the payee does not give the PAN, no, then the tax deduction or collection happens at a higher rate. That you are going to come to know tomorrow. Yes or no? So every person who is deducting the TDS or who is collecting the TCS, every person who is deducting or collecting the tax for the government, he will have to ask for the PAN from the opposite party. So the opposite party has to compulsorily quote his PAN to the payer who is deducting his TDS. If he is not quoting, he is quoting wrongly, okay, then the tax deduction will happen at a higher rate. Getting my point? So this will also be there. Next one, quoting of PAN in certain documents. Now there are no transactions, there are certain documents. In those documents also the PAN must be quoted. Now see, where any amount has been paid after deducting tax at source, TDS, the person deducting tax, meaning can I say the person deducting tax is the payer? Okay. So if I am a payer and I am making you the payment, So to make that payment, I have deducted the TDS, the person who has deducted the tax for me. Okay. Shall quote the PAN of the person to whom the amount was paid. So there is a requirement on the payer that payer make the payment to the payee, ask the payee to quote his PAN, take his PAN, and then after you have taken the PAN from the payee, meaning the person to whom you are giving the income, ask the PAN, ask the identity. Even we should know that from you who is earning the income. Ask for the PAN. If he is not giving, deduct TDS at higher rate. But if he has given, then reveal his identity to us. Now, as a tax deductor, you will be filing TDS returns. TDS return will be filed by the payer. Then TDS certificates you will be issuing to the payee. Okay. There are certain statements which are to be furnished by you. So TDS statements also. Okay. So all the TDS returns, TDS statements, TDS certificates, these are the documents which you are going to prepare. In all these documents, the person to whom you are making the payment, payee, from whom you are supposed to take the PAN, and you have taken the PAN also, this PAN of that person should be quoted in all these documents. If you fail to do it, oh, you are gone. Getting my point? Now, also a person collecting tax. Sometimes the seller, person collecting tax means the seller. In the TCS provisions, I am going to tell you this. Don't worry. Okay. So there is a seller who is selling the goods, specified goods, to the buyer. So from the buyer, he is supposed to take what? Supposed to take the selling price and supposed to take the PAN also. He will collect the TCS from the buyer, tax collected at source. So if the buyer is not quoting his PAN, no, TCS will be collected at a higher rate. If he is quoting the PAN, no problem. Then this seller will have to file TCS return, TCS statements, then TCS certificates to be issued to the buyer. In all these documents, the PAN of the buyer will have to be quoted, compulsory. Getting my point? Next one, requirement to intimate PAN and quote PAN not to apply in certain person. So these persons are not required to intimate their PAN and quote their PAN and not to apply. Meaning this requirement does not apply. Requirement to intimate the PAN, requirement to quote the PAN. Yes or no? A person who does not have taxable income or who is not required to obtain the PAN, he has been exempted by the government. Government has given the exemption. You are not required to obtain the PAN. Go. Or he is not doing any such transaction where the PAN is required to be quoted. Yes or no? So first, you are not having any taxable income and you are not required to obtain the PAN. If you are having a taxable income, but not required to obtain the PAN, then if the assessing officer would want, he can give you the PAN on his own, or you can apply what on your own also, suo motu. But wait, if you are not having a taxable income but you are entering into such transactions where PAN is required to be quoted, PAN is required to be obtained by you, then obtain the PAN even if you are not earning taxable income. Both these conditions must be fulfilled. See, does not have taxable income or who is not required to obtain the PAN. In any of these cases, if you are getting covered, no required to intimate the PAN or quote your PAN. Getting my point? Now, if such person furnishes a declaration under 197A, there is one declaration which will come in 197A, which I am going to tell you in TDS chapter. Okay, no? So leave this part right now. No need to do it right now. In TDS chapter, I am going to cover this in detail. Don't worry. Interchangeability of PAN with Aadhaar number. Now there is, see, if Aadhaar can be used instead of PAN, and PAN can also be used instead of Aadhaar. Why, Because PAN and this Aadhaar are linked. So whenever you make an application for Aadhaar, form number 49A, PAN is never issued. See, in our times when I took my PAN number, that time there was no Aadhaar. So I took my PAN without quoting Aadhaar number in my application. I was given the PAN. So like my father, my mother, like we are old people, no. So at that time there was no requirement of Aadhaar and all. Aadhaar came later on after 2010 and all. Okay. I took my PAN long back in 2006 only I had taken. So now later on when Aadhaar came, so there was no requirement of linking of Aadhaar and PAN. What used to happen in earlier days, Earlier days, a person who is having one PAN, meaning in the eyes of income tax department, this person is having this identity. Yes or no? This single person used to have multiple Aadhaar numbers on his own name. Just by changing the address, doing some twist in the name. Instead of, see, my name is Umang Thakkar. Okay. So on the name of Umang Thakkar, I will take one PAN. Now I will not show Umang Thakkar. I will just show Umang Shekhar as my name. I will show the same address, same building, but I will change the block number. I will be allotted the second PAN. And the PAN comes directly to your house only. Okay, they are not going to come directly to check everything. So now in the eyes of department, an assessee is coming, meaning welcome. No, if someone is coming to identify themselves, welcome. A new assessee is getting added. One person used to have multiple PAN, 3 PAN, 4 PAN. Now what will happen if you are having a 4 permanent account numbers? Meaning in the eyes of law, there are 4 different persons. Everyone should get 2,50,000, 2,50,000, 2,50,000, 2,50,000 basic exemption limit. I used to bifurcate my 10 lakh rupees of income for this year in these 4 names. I never used to pay any tax. I'm just telling you the example. Actually, I have not done it on my own. Okay. I'm just giving you an example. Okay. This used to happen. Now, to avoid this thing to happen, see, one single person bifurcating his entire 10 lakh rupees of income into 4 different PAN. Now later on, government came with a master stroke. See, Aadhaar number is issued based on your fingerprints, iris scan, and this will be unique for every individual. My iris scan and my fingerprints will not match with that of yours. And my Aadhaar number, my identity will be based on my iris scan and this thing. So this is my identity. Now one person, if I will go and tell them, give me one more Aadhaar number, extra Aadhaar number, they will say, okay, sit. Iris scan. This is also scanned. System will automatically show this is already identified individual with this Aadhaar number. The system is not going to accept a different identity for the same person. Getting my point? So new Aadhaar number cannot be given. A single individual will be given only single Aadhaar. I cannot have multiple Aadhaar. So now Aadhaar will be only one. Now income tax department, for those persons who had applied their PAN in earlier days, when there was no requirement to quote the Aadhaar number in the PAN application. There was no requirement to quote the Aadhaar number in the PAN application. That time only I had applied for PAN. Now all the PANs which are already issued will have to be linked with Aadhaar. A deadline was given. That deadline is long back over. Everyone has, linked their Aadhaar card with PAN and PAN with Aadhaar. So I have linked my one Aadhaar number with my PAN. So I had 4 PAN numbers. For example, I had 4 PAN numbers. So if one Aadhaar is linked with one PAN, no, all the other 3 will now become inoperative automatically. This was a master stroke by the government. And there was some time which was earlier given to do this linking. Then later on, this used to get, extended and on. Then they came up with an idea that now whatever new applications for new assessees will come, no, in that new application, do you remember I told you form number 49A? In that form number 49A only, give the mandatory field to quote Aadhaar number. Without that Aadhaar number, the PAN will not be allotted. Getting my point? Now pay attention. Earlier what used to happen? Without PAN, Aadhaar, PAN was allotted. So there was a linking which was supposed to be done and a deadline was given. Now that deadline is over. Now no linkings are done. All the PAN numbers which are there with which no linking is done have become inoperative. Okay. Now whenever someone will come to apply for PAN, we are going to ask Aadhaar number compulsory in form number 49A. Without that Aadhaar number, the PAN will not be allotted only. Now your PAN is as good as Aadhaar and Aadhaar is as good as PAN. So if you have not applied for Aadhaar, go and apply for Aadhaar first. Obtain the Aadhaar number and based on this Aadhaar number, your application for PAN will be processed and you will be allotted the PAN. Now your PAN and Aadhaar both are linked, no? Now whether you quote PAN or you quote Aadhaar, one and the same thing. Getting my point? Earlier what used to happen, to apply for PAN, if you don't have Aadhaar number, no, just make an application for obtaining Aadhaar number and that application enrollment ID also you used to give here and they used to accept. From this year onwards, they have stopped taking that enrollment ID also. We are not going to take Aadhaar enrollment ID in form number 49A. Obtain the proper Aadhaar number, quote the proper Aadhaar number, only then the PAN application will be processed and PAN will be allotted. Otherwise, PAN will not be allotted. Getting my point? Everyone? So, every person who is required, now read this part, no, at home. Please read this part at home properly, okay, no? Not that much important. Now, quoting and authentication of PAN or Aadhaar number, read this part also once at home, okay? Next one. Now, these are the nature of transaction. The same transactions which I have already spoken about, the same transactions are there, okay? Now, okay. Power to make rules, CBDT is empowered to make rules. Now, all these transactions are just time pass. No need to read anything else. Now, read the penalty also properly once. That's it. Okay, which I have already told you, 10,000 for every default. Yes or no? And quoting of Aadhaar number in your PAN application, I have already explained this part now. This is 139AA and PAN provisions are given in 139A. So all the provisions which are given in 139A, those are PAN provisions, and all the provisions which are given in 139AA, they are Aadhaar provisions. Yes or no? Quoting of Aadhaar number in your documents. Okay, now pay attention. One simple thing I would like to tell you over here. Quoting of enrollment ID where person does not have Aadhaar number. If person does not have Aadhaar number, he is required to quote enrollment ID of Aadhaar application form at the time of, okay, enrollment ID means this. However, with effect from 1st October 2024. This is the amendment which I have already told you. See. So you don't have to worry that something will be missed. If I'm telling you I have covered 100% things, it is 100%. Nothing will be left. Don't worry. Okay. But whatever things which are irrelevant, no, don't waste your time also. Save your time in that. And wherever it is required, I am telling you everything in detail. Okay. So Aadhaar number, this provision, no, read everything properly at least once. But when you will read, no, you will come to this part. This is an amendment for this year. Please go through this properly. Remember this. Might be for 2 marks they can ask you this. Might be. Okay. What are the provisions regarding Aadhaar enrollment ID with regard to permanent account number? Explain. 2 marks. They want to ask you this thing only, that whether you are aware about this or not. Okay. Now, consequences of failure to intimate Aadhaar number. What are the consequences? Please read these consequences once properly. If you fail to intimate Aadhaar number, what are the consequences which you are supposed to face? Okay. Read. Now, okay. Scheme of TRP, tax return preparers, 139B. Read it once. Now what is TRP? I'll tell you. Today I have shown you a income tax return form. Did you see that form? That was ITR 4. Sorry, ITR 3. If you are having a PGBP income. I have not yet shown the ITR 5 applicable to forms. I have not yet shown ITR 6 applicable to the companies, etc. Getting my point? If I'll show you, no, you will faint. Very tricky, very difficult. Even a small simple ITR 1 is also very difficult to, fill. Now an assessee cannot be expected to have that expert knowledge to fill up these kind of complicated forms. So that poor assessee will have to go to a chartered accountant. And that chartered accountant will file and he will charge fees also. Yes or no? Krishna, will you charge fees? How much? It depends, sir. In what mood I am. Okay, it depends on my mood and the person. If I like that person, I will charge less. If I'll not like, I will say more. Okay. Now that poor fellow has to come to you to file his return. Definitely, if a small person comes, I am a chartered accountant, I have studied for so many years, just to charge 200 rupees, 300 rupees. No, I'll definitely charge 1500, 2000 rupees depending. And then the sky is the limit for me to, charge any amount from my client. Now, there are certain cases in which genuinely there is no requirement of a chartered accountant to file your return. But that return itself is not that much easy for you to file. So the government has come up with a scheme. The scheme of tax return preparers. Tax return preparers. So if you have eligible qualifications, what did I say? If you have eligible qualifications, what should be your qualification and all? It is written over here. Okay. So you can become a tax return preparer for the income tax department. Become tax return preparer, you will be given the training of TRP. And now in the return filing season, means prior to July, prior to October, yes or no? In the return filing season, you will be called upon in the income tax department. Now there will be some assessees who are allowed to take your help. By taking your help, the assessees can file their returns. But there are certain assessees who cannot file their return of income by taking the help of TRPs. They have to compulsorily file return on their own by taking the help of a chartered accountant only. For example, if there is an assessee whose business turnover is more than 1 CR, meaning covered by tax audit provisions, Now that assessee cannot come to TRP and tell that file my return. Disqualified. That kind of assessees cannot file returns through TRP. Getting my point? So there are certain assessees who are not allowed, who are disqualified. They cannot get their returns filed through TRP. Non-applicable for them. Yes or no? But for others, they are allowed to file their return through the help of TRP. Now, who can become the TRP? What should be their qualification, etc. All these things are given in 139B. Read it only once. No need to get into details, but read it properly once. Okay? See, wherever it is required, I have already explained the entire provisions. Okay? But if my involvement is not required in this section, I will tell you to read it only once. Read it once. But don't leave it in option. Okay? Now, see, did I tell you applicability of the scheme, eligible person, tax return preparer, all these things you read, educational qualification of TRPs, preparation and furnishing of return of income by TRP. Then, if you go through this note, illustration. In this illustration, no, Hetal is doing a business of beauty parlor. She is into a business. And her books of accounts are audited under 44AB. Meaning she is running a beauty parlor whose turnover is more than 1 CR. Just imagine. Or if we talk about the profession, if it is a profession, okay, so the turnover gross receipt is more than 50 lakhs. And from this she is earning a profit of 6 lakh 35. See, they are not telling you that 1 CR 50 lakhs. No, they're just telling you the profit. Profit is this much only. Bloody this much is profit, but just see, no, she's covered by tax audit provisions 44AB. So her total income is this much. She wants to furnish her return through a TRP. Can she do so? The answer is no. So as per the TRP scheme, a person who is covered by tax audit provisions cannot furnish his return through the help of TRP. Okay. So Hetal cannot do that. Understood, sir? Next one. Now person authorized. See, if I say, if you are an individual, now who will verify your return? Who will sign your return? You yourself only, no? Your return you can sign. You are filing your return, so you have to sign your return. That is known as verifying. So it is verified that the return is filed by the same person to whom it belongs. Yes or no? So if I want to file my return, so I have filed my return. So how the government will come to know that myself, I am only filing my return? Somebody else can also come, no? If he is angry on me, he will say, no, Umang sir is earning 50 crore rupees in a year. He will file my return. No, it should not happen. So the details which are coming to us is coming from that same person to whom it belongs. So the return must be authorized. Return must be verified. Verification should be done. And who is authorized to verify the return of an individual? Individual himself. But sometimes individual is absent from India, then these persons are authorized. If he is mentally incapacitated, a person of unsound mind, his return, who can verify? This guardian, etc. If whether by any other reason it is not possible for the individual to verify the return, what if he dies? Will he be able to verify his return? Last year return, who will verify? This person. What if a Hindu undivided family is there? Who will verify the return? Who will sign the return? Yes or no? Then in the case of company, who will verify? In the case of firm, see, different situations are given. Now you never know, out of any of these situations they will make a case study in the question. Just like here, see, there is one question I'll tell you. There is one question which I'll tell you. See, Hmm. Wait, huh? Hmm. Can you see third question? Where the Karta of HUF is absent from India. Karta of HUF is absent from India. The return of income can be verified by any male member of the family. Is it a true statement? False. But how will you come to know? For that you will have to read that section 140. In that section 140 it is written that if HUF is there, the return of the HUF has to be verified by the Karta only. But if due to some reason Karta cannot verify, why? Because he is not present in India, he is absent from India, then any member of the family can, any adult member of that family can verify the return, not necessarily a male member only. So this statement is false. But for saying the correct answer, you should be reading this entire, this entire part. Read this section properly. See, read only once, but read it properly. See, my involvement, there is no technicalities involved. So whatever I will speak, you are also going to read that only. Getting my point? So no need to spend my time over here. You just read it once, you will come to know. Okay. See, HUF is there, no? HUF. In circumstances not covered in 2 and 3 below, Karta has to verify. Now what is it? Where the Karta is absent from India. Any other adult member of the HUF can verify. And what was written over there? Only a male member can verify. No, that is wrong. Any other adult member can verify. Getting my point? So that statement is false. Now where the Karta is mentally incapacitated from attending to his affairs, then any other adult member, he will file the return of HUF. Getting my point? Pay attention now. Now see how difficult the questions are. I will tell you. We have completed this entire chapter. Okay. Now in this chapter, state with reasons whether you agree or disagree with the following statements. Number 1, return of income of LLP could be verified by any partner. Now for this also you will have to go to section 140. Who can verify the return of LLP? Go and check there. Go. Any partner? No, only a designated partner. Yes. So a designated partner can verify the return of LLP, not any partner. So this statement is false. We disagree. Then time limit for filing return under section 139(1). In the case of Mr. A having total turnover of 160 lakhs, 100 lakh received in cash for the year ended 31st March 2025, whether or not declaring presumptive income under 44A is 31st October 25. Wrong. If your turnover is 160 lakhs, meaning it is less than 2 crores. Hello sir, it is less than 2 crores, meaning that you have to at least show 8% or more as what? As your presumptive profits. If you are showing presumptive profits, turnover is less than equal to 2 crores and you are showing presumptive profits 8% or more, then no need to maintain the books, no need to get them audited. Audit is not applicable. So for you, the time limit for furnishing will not be 31st October, it will be 31st July. Getting my point? But if you are showing less than the presumptive profits, then even if your turnover is not more than 2 crores, hello, but since your turnover is more than 1 crore, you will be covered by tax audit provisions because you are not showing presumptive profits 8%. You are showing less than that, meaning that you will be now covered by tax audit provisions. So for you, now the due date will be 31st October. So whether you are showing presumptive profits or not showing presumptive profits, every time it is not 31st October. Sometimes it can be 31st July also. If you are showing presumptive profits or more amount, then you are not liable for tax audit. Then it cannot be 31st October, then it will be 31st July. Getting my point? The same thing is given as an answer over there. When you are going to see the answer, you are getting the same thing. Okay. Now see, for the 100 lakhs, you are supposed to show 8%. And on the 60 lakhs, you are supposed to show 6% only. Why? Because 100 lakh is received in cash. So balance 60 lakh is received in what? What? Other than cash. So 60 lakh into 6% will be 3 lakh 60. 100 lakh into 8% will be 8 lakh. 8 lakh plus 3 lakh 60 will be 11 lakh 60. 11 lakh 60 or more profit if you are showing, no? 11 lakh 60 or more profit you are showing, meaning no need to maintain the books, no need to get them audited. 31st July due date will be applicable. And if you are showing less than 11 lakh 60, then tax audit will apply and 31st October will be applicable in that case only. Understanding? Now, Mr. Vineet exercised the option of shifting out of default tax regime provided under 115 BSE 1A and submits his return of income under the optional tax regime, that is normal provisions, on 12th September 2025. See, he has submitted his return on 12th September 25, which consists of income under salary, house property, bank interest. Okay. On 21st December 2025, he realized that he had not claimed deduction under ATTTA in respect of his interest income on savings bank account. He wants to revise the return of income. Can he do so? Absolutely yes. As per 139.5, whether you have filed your return on time as per 139.1 or even you have filed your belated return. In this case, he has filed his belated return. Can I see 21st December 2025? Sorry, 12th of September 2025, he has filed his return. 12th of September 25, yes or no? Meaning after the due date, 31st July, he has filed. Now in this return, he has found out some mistake that he has not claimed ATTTA because he was earning interest on savings deposit account. He wanted to claim it under ATTTA, but he could not claim in the return filed on 12th of September. Meaning the belated return was filed. In that belated return only, you did not claim ATTTA deduction. Now this thing you came to know on 21st of December 2025. Do you have some time to revise your return? Yes. 31st December 2025. Till that time you can revise your return. Whether you have filed that return on or before the due date or even the belated return you can revise, but you have to revise on or before 31st December. So yes, he can revise. Okay. Now, would your answer be different if he discovered this omission on 21st March 2026? Meaning after 31st December 2025 he came to know. Now he cannot revise. The time limit for revision was up to 31st December only. That is gone. Now he will have to file the updated return. But by filing updated return, in that updated return he cannot show this ATTTA, because of which the total income will come down, his tax liability will come down. So he is not allowed to file updated return also. Getting my point? This kind of question they are going to ask you for 2 marks. Just imagine. Okay, next one. Examine with reasons whether the following statements are true or false. Assessing officer has the power to allot PAN to any person by whom no tax is payable. Yes, he has the power to allot to any person. Even if no tax is payable by you, and if you can go and voluntarily tell the assessing officer, allot me a PAN, he can allot. He has the power to do that. Getting my point? Now, where the karta, I have already told you this. Point number 2 is already done. Okay. Explain the term return of loss. For this, whatever is written in 139.3, go and write everything which is written in 139.3. That is loss return. Now, Mr. Akash has undertaken certain transactions during the financial year which are listed below. You are required to identify the transactions in respect of which quoting of PAN is mandatory. And we have just now seen all those transactions, if you remember. Please pay attention. Payment of life insurance premium. The amount of life insurance premium should be more than 50. Only then the PAN is required. So in this transaction, will the PAN be required? No, because the life insurance premium is less than 50. Now payment of rupees 1 lakh to a 5-star hotel for stay of 5 days with family, out of which 60,000 was paid in cash. Wait. Even if the bill is 1 lakh rupees, if that entire bill was paid in check, there was no requirement of PAN. PAN is required if one bill or multiple bills, single time payment is made in cash, and that is also more than 50. So is the cash payment more than 50? Yes, 60,000 cash payment is happening, which is more than 50. Hence here the PAN will be compulsorily required. Payment of 80,000 by ECS through a bank account for acquiring the debentures of an Indian company. Is the payment more than 50? Yes. Here there was no requirement of mode. Any security by whatever mode you are acquiring, per transaction, if the value is more than 50,000, hello, then you are supposed to compulsorily quote the PAN. Yes or no? So payment of rupees 80,000 or more through a bank account for acquiring debentures of A Limited and Indian company. Okay. Payment of rupees 95,000. Wait, just a moment. 80,000 by ECS, no, through bank. Just let me check the transaction. This transaction was acquisition of debentures, no? Debentures. (272B). Immobile property, mutual fund purchase units 50,000. Company, institute. Yes, see. Can you see payment to a company or an institution for acquiring debentures or bonds exceeding rupees 50,000? In cash exceeding rupees 50,000 written? In cash exceeding 50,000? No. Any mode more than 50,000. Payment to a company or an institution for acquiring debentures or bonds. So this was the payment for acquiring debentures of which company? Company was there, no? It was a company only. Please go and check. See, Indian company, A Limited. So 50,000, more than 50,000, if the payment is made, by any mode it is made, PAN is compulsorily required to be quoted. Okay? Yes. Now, payment of rupees 95,000 by account pay check to Thomas Cook for travel to Dubai for 3 days for a visit. Hello? So how much for travel? Yes. So, because in cash, if you are making the payment of more than 50, then only it is required. So now the payment is made by what? Account pay check. So if you are making the account pay check, no, so whatever payment you are making, there is no requirement of quoting your PAN because the payment is made by account pay check. Okay. Next one, applied to SBI for issue of credit card. Compulsory PAN is required. Okay. Now see, out of all those transactions, any of these transactions can come. And they are asking like this only. Will you be able to write down? Sure, sir. So this is the end of this chapter. Okay. This is the end of this chapter. So we are starting with advanced tax. We are starting with advanced tax now.